buy uranium and lithium, but not like buying it, like putting it in your pocket, but buy like waving a goodbye. And hello, tin and antimony. That's among the lines of what I'll call this episode, in an effort to be as little clickbaity as possible, I suppose, because you, Anthony, are very bullish on these two, but I'm not yet quite convinced. There are obvious challenges. There's supplies. There's China. There's a lot of things to talk about. So we'll see if you can convince me here by the end of the conversation. And then for people watching, after my conversation with Anthony, I'll talk to two junior mining CEOs. One of them, a private company that is looking for the next big porphyry discovery in Idaho, with that being Scout's Discoveries. I met him at Beaver Creek, piqued my interest. I thought I'd sit down with them for a conversation. And then the other one being American Pacific Mining, which has exposure to many different metals, with that being lead, zinc, copper, and even gold and silver. So please use the timestamps that are on your screen right now or in the description of this video and on the time bar on the YouTube play thing, of course, to navigate this episode of Energy Transition Talks. Because Anthony, we are going into some largely untouched territory out there. Because again, while everyone is talking about uranium and lithium and maybe even gold and silver, you've been working on some obscure stuff. So tin, antimony, and even fluoride. So I want to dive into tin first, understand the thesis, see how to play it, if I even want to play it, and then go into the other ones as well. So just maybe high level to kick it off and talk to me like I'm 5 years old, as I'm not much more than that, at least mentally, although my lower back might disagree. But why tin? And more importantly, why now?
Yeah, no, well, actually, the interesting thing is, I'm not going to tell you why 10. I'm going to tell you why 10 antimony fluorspar, because actually, all three of them have almost the identical setup. So, 10 antimony fluorspar, they're all minor metals, right? In fact, most people don't even know what fluorspar is used for, tin or antimony. And yet, they're absolutely critical to our modern life. Each one of them, in one way or another, acts as a solder for electric vehicles. They're all used in batteries. They're all used in, um, you know, almost every, semiconductors, almost every aspect of our modern life. But what is the one thing that each one of them have in common? And it is that the production and refining is controlled by China. And, that's not always been the case. And we can talk on a case by case basis. But, as we now enter a moment here, and this will date the interview, but you have Israel and Iran kicking off last night. You have a war going on in Russia. As we increasingly live in this hyperpolarized world where the West is not in particularly good terms with, let's say, Russia and China, these metals are even more critical because we can't just magically make them appear into our supply chain. They have to come from China. And so before we kind of go into the nuance of each one, it's a really interesting aspect. The last antimony mine in North America closed in Montana. There's basically nothing else. Military Metals is trying to restart a mine. We can talk about that in a bit. Tin, it comes out of China. That's where, and to a lesser extent, Indonesia and Myanmar. Um, Fluorspar, once again, it comes out of China. There's some in Mexico. There's a project they're trying to develop. So that is just to kick it off. I think one of the things to think about and focus on is in this more complex world and a world that's pretty troubled. You have these minor metals, which are expensive to mine by and large. Sometimes they're a byproduct, which means they're not the primary driver of economics in a given mine. And, they just didn't get put in the geology of the West by and large. And so that's the setup for tin. I mean, that's the setup for antimony, and that's the setup for fluorspar.
Hmm. So lots to talk about there. I kind of want to take it on a case per case
Yeah,
basis
no, no,
because
sure. I just wanted to give you the high level as it's interesting because the same thing is driving all three of them, and that's why it's hyper kind of interesting. And we can even talk about that later in terms of how you invest in it and think about it. Because I mean, historically, of course, you would say let's invest in tin or let's invest in fluorspar, but maybe with these critical minerals, the way that you could diversify a portfolio ultimately is by owning across some of them. But let's take tin first of all. China refines today about 50% of global tin, um, probably produces 30% of the tin, followed by Indonesia at 25%, Myanmar at 10%. Um, you know, there is a huge mine, obviously, in the Congo Alpha Man and has that mine. It's a great producer and supplier potential to the West. But that production is critical. And, what is tin used for? In particular, I think it's think about it as solder. It's kind of the fabric that holds together all these electronics. I mean, that's the future demand. And as we sit here thinking about artificial intelligence and the ramp up in GPUs as the large language models are expanding, we're going to need more of it. You also look at the global explosion in solar. Uh, that's heavily driving not just tin, but frankly, fluorspar and antimony as well. So you have those electrification narratives, which are really big narratives and driving copper, for instance, the copper narrative in the mining space. But they're also the key drivers of these markets, which are very small markets, and in a way have the potential to kind of put extreme pressures into these small markets. If you think about copper, it's such a large market that incremental demand increase may or may not have an impact. A supply response one way has a bigger impact than maybe a demand increase. Whereas with say tin, a 5 or 10% demand increase caused by a 1% global solar increase, a small number, can absolutely throw the whole ecosystem out of whack.
Yeah.
Uh, yeah.
Yeah, that makes sense, and that's what also want to get into is the supply and demand dynamics a little bit later on. And as I understand it, you're taking a very bullish long term view on these metals and specifically on tin, which I can appreciate. That's typically what I fancy myself as a long term investor, at least when my wild gambles don't work out in the first month and I'm forced to hold them. But what about the short term? Or maybe looking at it that way. I mean, tin's up almost 50% on a year basis. So, what part of the cycle would you say we're in right now? And how long could this cycle get?
Okay, so that's an interesting question about investing. And I view all these equities as options. Theta is time decay. That's the cost of management teams raising capital. So I personally don't look at any of these names as a 5 and 10 year hold because I don't think you can.
Mhm.
So I think you always have to sell. You buy in and it moves and you sell. Notwithstanding that, what we've seen kind of across the board. I mean, even in gold, this is true. We've seen a dramatic move in the underlying commodity prices. This is true in tin, and we have not necessarily seen the equities have a commensurate move. So that to me means like one of a couple things. It means one, the market simply doesn't believe that long term a given commodity move is real. That it's temporary. It's not a long standing move, or they think that the market will respond very quickly and dump supply in. Um, and that can be true. I think another read is that because the tech equity markets and just frankly the S&P have been so spectacular for so long that investors haven't felt the need to come down market cap, to come into a little bit ropier sector like mining and place their bets. And to me, what that kind of speaks to is an opportunity. So if you look at tin and you're taking the view that the tin price is going to remain strong or stronger, then I think you do have the opportunity to sit there and wait and let the equities catch up. However, if you look at that tape and you say, Anthony, I don't really agree with you. I think a lot of supply is going to come in Myanmar, or Indonesia, a lot of alluvial supply. If that's your view, then I don't think you can hold it through. I think if that's your view, then you got to sell it, take your win, and then let that dump happen. Because typically there are limits to what alluvial save it for cobalt. Typically there are limits to what the alluvial market can produce. You let the market absorb that, and then you're there for the next uptick. And so I think, like for tin, for instance, we're talking about tin. I think you're really going to have a view on that particular aspect of the tin price before you really go long equities. Now, tin is unique when you compare it to say fluorspar or antimony, because we're going to talk about all three today. It's unique because there's a very, very liquid contract. So you can trade the physical very easily if you have an interactive broker account or a bunch of these other accounts. You can trade this metal and you can speculate either way in all sorts of fancy puts strat. I mean, you can basically do anything you want with tin. So tin is unique in that way, and I think it's interesting because you could actually hedge in a way that you couldn't with any other minor metal just about. You could short, if you think, for instance, the equity is going to outperform the underlying, you could short it. There's all sorts of fancy things you could do with tin that you simply can't do with other metals. But to be clear, if you don't think that the current tin price is going to hold in there, then I think you just take your gains and move on and don't try to capture that last move of the equity that you're in long.
So for a second to pretend that I understand baseball, in baseball terms, what inning do you think we're in?
Okay, so for tin in general, this is early, right? But that's different than what is the cycle that matters for your investment, because those are two separate things. I mean, I think if you look over the next 5 or 7 years, um, we had the Industrial Revolution of China, and in general, I'm generalizing, we had a massive overcapacity build for commodities in general. Just that capacity was overbuilt. Now we're more than a decade on from that. Almost 15 years on or so from that kind of overbuild, and very little exploration dollars have gone into the ground. I'm generalizing. We've had moments with lithium and different things, but overall, very few exploration and development dollars have gone into the ground. And so we are reaching the end of life, or the twilight of life, for, in particular, copper is true, but minor metals as well. And so when I look at tin and I look at the continued trend of solar and what's happening with semiconductors and electronics, like I think this is like the third or fourth inning.
Hmm.
That's different though than, do I think you should be owning an equity or not? And the reason I say that is because the charts don't all sort of go like this. You can have pullbacks at certain moments, and so when I personally am trading this stuff, if you got in at X and you're up 3 or 4 times, you take your money and sit back and let there be a pullback, and just be happy. You never, like, what's the kind of anecdote? I'd rather make a small fortune selling too early than lose a small fortune selling too late.
Hmm.
I think because these names are options, the way I see them, there is theta. So if you sit here and say, "Well, I'm going to sit through. I'm bullish just like you. I believe in the solar theme. I believe in all this stuff. I'm going to sit through it." You can still get carried out of that trade, because if you're not in a producer, you're in an exploration or development company. There's a huge wall of capital to be raised, and so if tin sells off and they raise at the bottom before the next uptick, you can still get smoked out. And so that question has nuance based on when you got in and what your view is. But I would say, if we talk about the general tin kind of thesis, this is still third, fourth inning. It's really early.
And you're mentioning solar and other technologies in there. How much of your bullish outlook for tin depends on increased demand from things like solar or AI, data centers, or other tech-focused industries where maybe not everyone agrees on the bullish demand outlook for those. So how much of your thesis depends on them working out?
The biggest aspect of my thesis would be solar. Um,
Hmm.
I just that the amount of silver, that's potentially required, and the solar, just factually, solar panels, they're getting cheaper and cheaper, um, and increasingly, even in certain developments, they're being required. And so I think that demand is not going away. That demand is real. Uh, I actually also believe in the AI demand, but I think on a relative basis, tin used in semiconductors is dwarfed by, even in the most bullish case, I think is dwarfed by tin used in solar. So you can easily just dismiss the AI narrative, even though I don't, but you can dismiss that. And so long as you continue to share my view on what's happening in you know around solar, around that rollout globally, by the way, not just the US. This is the China rollout, a European rollout, an African rollout. I think it's pretty hard to be bearish on tin over, any midterm period of time.
Isn't it kind of challenging though to run supply demand models as a whole for tin, given how quickly some of these countries, as you mentioned, Myanmar, but specifically Indonesia and Myanmar, right, can ramp up production? I mean, that probably makes it a little bit more challenging to model tin supply and demand.
Yeah, for sure, for sure. I mean, and by the way, like, look at what's happening with Indonesia and nickel. They've totally foregone any care for the environment. They're absolutely devastating the environment. And why I say that is because you can get X amount of tin if you mine a certain way, but if you forego that and you mine a different way, you could even get X squared, or whatever that is. And so I do think it's very challenging, especially because of the amount of alluvial out of Myanmar and Indonesia, to really model it. And I also think if you have a massive spike, like it's just something crazy, crazy spike in tin, you are definitively going to get an alluvial artisanal response. Like, that's for sure. And that's why I think with these minor metals, you really have to trade them. Don't fall in love. You know what? No one ever owns these stocks. They rent them. You cannot sit there and say, in my opinion, I'm going to hold this stock for 6 years. That is not something I would ever do.
Hmm.
I think, you can take a relatively short, I'm talking specifically about tin. You can take the short-term view. Tin's moving, a stock you like is moving, but I think it would just be ill-advised to buy a stock that is long tin and think you're going to hold it through the next 6 years. I think that would be a mistake. And for the exact reason that you highlight, which is you have this big tin spike, your equity name doubles or whatever happens to it, it goes up. Uh, and then tomorrow you read that, X amount of tin is coming out of this new alluvial thing. They pop the fence and they're going to mine it. And I would note, and this is important, look at cobalt. You had this massive artisanal response, and everyone talked about blood cobalt and how bad the artisanal cobalt was. But you know what? Somehow it still got incorporated into the supply chain. And so, any kind of short-term narrative around how, well, if this alluvial supply kind of came in to the market, it would be, they wouldn't want it. It wouldn't be green. It wouldn't be clean. Whatever that narrative kind of emerged, I would just say it's just simply wasn't the case with cobalt. And so I don't know why that would be the case for tin. So to me, if you're going to trade tin, and by the way, what's interesting about tin, to come back to this, you can, unlike other minor metals, where you have to be much more careful in the equities because of liquidity, with tin, you could be long. I don't know what names you like. You like Alpha Min, Cornish Metals, whatever it is that you like, right? Um, you could have a larger position there and then short the contract. And so you could actually kind of save yourself in certain situations. Now, I think that equity is going to be much more levered. And so the move, it could be more dramatic. And so it wouldn't be perfect. But at least that tool could potentially be, or buying puts or whatever, that tool could be available to you in a way that just is not available for other minor metals.
Hmm. Well, don't fall in love, date them, don't marry. It kind of sounds like the advice that my dad was giving me when I was 18. Still moved in with my wife when I was 19, though. But if the supply remains as constrained, though, as it is now, couldn't that be the Achilles heel, if you will, of the tin market as a whole? And I'm particularly thinking about substitution here, which I know isn't easy, but some alternatives, such as what do you have, barium zinc or calcium zinc? Those alloys do exist. They could be substitutes. So that probably places kind of a ceiling on the tin price, if you will, right? What would you say that ceiling is?
Okay, so I look at it differently. I don't think that, I mean, look, substitution happens in all these metals to a certain extent, but you reach the end of that substitution, and then whatever the substitute is, you start to impact that. And so it's kind of this circle. And so I'm a really big believer. In fact, over time, I've looked at this. There is an incentive price. I don't know what that incentive price is exactly, where I can promise you a bunch of tin mines will get funded, like, and it will return to equilibrium. Like the remedy for low prices is low prices, and the remedy for high prices is high prices. And so, at some point, you will see a number of tin projects. There's the tin project in Morocco. I think I can't think of who has it. Atlantic Tin maybe now has it. There's the tin projects in Europe that uh, First Tin has. So there are there's tin projects in Australia, and so I think what you see is the financing of these mines, and that's the response. And I actually think at some price, you will just fundamentally have an artisanal response that will be swift and significant, because that's just the history of these minor metals. And I think cobalt is the guiding light for this. That would happen with tin as well. And so, if you're an investor in tin and you like tin and you're long tin names, I actually think you don't want this massively dramatic, like, and kind of unceasing, relentless move higher. Like that, I think is actually not a great chart. I think the chart that you actually want is, it moves up, demand continues to increase, and you slowly have that move up. I think that's a much better chart to be long equities than like this hyper dramatic move. And if, by the way, if you have like the blow the top off move in 10, you should sell. Like whatever equities you own, like I would get out, because there will be a supply side response. And I think it will first come in the form of alluvial response, because I think that there is more in Myanmar, and I think that is Indonesia, and I think that's possible. But I would say the other part of the gradual move up is it's more likely that hard rock mines would get funded. There are other large mines in the Congo that are potentially there as well. And
It,
actually, even in Canada, um, there there are potential projects that haven't been pushed. So I think the convexity, like I think how quickly and how swiftly and how steeply that move happens determines in large part how the response is. And I think a slower move up, a gradual move, is much better for like the long-term health of these names, like the equity names.
what do you think the incentive price is for new production to come online, specifically in the Western world, as we call it? So Canada, for example, is what you gave.
Yeah, I've actually been really thinking about this for not just tin, but for antimony and fluorspar and nickel and copper. And the answer is I don't know because on an Excel spreadsheet, you can come up with a price. But if you need to go raise 500 million or $1 billion right now, like I just I don't know if there is a price. Like I don't know, and this is really problematic and like speaks to like the national security issues associated with a lot of these critical minerals. Is like, okay, the US government, the Canadian government, they're not going to loan you the money really. I mean, they might give you like a kiss here for refining or something. The US government is doing that now. But, some of these projects, you need $700 million. Like the market isn't funding that at any price right now. I mean, it doesn't matter if you're 40% in the money on the incentive price. And so I don't know. I think there's a really interesting conversation. I mean, look at nickel. I think almost 80% of nickel is produced in Indonesia now. And yet, look at Canada. Canada has Dumont, Turnagain, Mark Selby. I can't think of the name of Mark Selby's underlying nickel deposit that he's got. But anyhow, there's all these nickel deposits in Canada, and nickel is really important. Not a single one of them that I'm aware of is funded to be built at the moment. And that's a big commodity, big market, a lot of mini uses. When you talk about tin, antimony, fluorspar, you're talking about much smaller markets. And, it's hard for me to envision any incentive price in the current climate where you're going to get that in Canada, which is a big problem. And I think, it's like all these things, nothing's a problem until it's a problem. But with antimony, we talk about it in a minute. China said, "Well, we're not gonna export it, guys. Tough luck. Go find it."
Hmm.
Um, and I think we're in a bind now because you have Alpha Man and because you do have the potential for increased Congolese production. Um, maybe if you're sitting inside of the DoD or one of these organizations, you feel like you could go into the Congo and secure that supply if you had to. Um, but with the refining capacity, I mean, that's just part of it. Part of it is just the mining side. The other side is the refining capacity, which is squarely sitting in China. So I don't know. It's an opportunity, but I don't know that the market is there to fund these things.
But why I'm asking about the incentive price here, Anthony, is because I'm thinking, when is that supply response going to come so that you can kind of prepare for it and get out before it actually happens? So at what
I think
price?
the supply response I think the supply response from artisanal mining would come before someone raises $1 billion or $500 million to build a mine in Canada. Like that's not a great answer. I know, Antonio, it's not like a great answer, but it's so perplexing. Um, like the state based on how critical all these things are to our life. Like you can't live a modern life without copper. It's not happening, right? Or hydrocarbons or any you can't just that's just how we've built all the technology that you and I are using right now. And yet it's completely unfinanceable because it's a hard business. You're cracking rocks. You're taking one rock and cracking against the other rock and then heating it up and pouring some acid on it. It's a hard business. And people have lost money because um, you can get the cycle wrong. Like the company that you like in Canada, whatever that company is, it'll raise $600 million at the very top of the cycle, and all the investors will get crushed. So there's just this record of destruction, of value destruction in the space, not because of anything that management teams have done per se, just because of the nature of commodities. And I suspect that this is why or where China has really gotten this right, and they've subsidized that development because the Chinese government is taking really a 50 or 100-year view. And the US capital markets, while they're efficient in the sense that they're helping their investors make money, they're not necessarily efficient allocating for the defense needs of the American people. And so, what you have is complete allocation to um, tech and the S&P and big liquid names, and you have almost no allocation to these things. And so, if you say, what is the number? I'm not sure what the number is, but I would be willing to bet that that number is higher, or that number will incentivize artisanal to start to come in before it starts to kind of really drive forward any particular Canadian name. I'm not, at least that I'm aware of. There could be projects I don't know about.
But what about in terms of time? Do you have an internal expectation where you say, "Oh, I expect this time for it to take that long before we see more tin supply come online?"
Yeah, so we're not there yet. Like, what the current tin price is not incentivizing that, and it's a great tin price, and it's not incentivizing that move, and so that's a good sign. And we saw tin roll over, and it's kind of bounced back, so it's not incentivizing it at this moment. Um, and so I think that's like kind of telling that we've not seen that kind of wave of production come in and crush tin like we saw in cobalt, for instance, or frankly, like we've seen in nickel. This huge supply response that's crushed those markets for a while. Um, so I think that's bullish, but I would say because this is a minor metal, because of these opaque supply response mechanisms, that you have to be much more nimble in how you own the equities. But that's how I see that.
So again, there aren't all that many ways to play tin, though. There aren't all that many companies active in it. Like you basically have Alpha Min, and then you have all the other stuff that could offer you leverage. But do you really want it? How are you thinking about? How are you getting exposure to it?
Yeah, so I actually like the contract. It's super liquid. You can trade the contract. You can do anything you want with the contract. And then I think you can pair that with Alphamin. That for me is the easiest way to play it. And I don't, and I can tell you, these are not names, like I said, I don't rent tin names. Actually, I don't own tin names. I rent them. If there's something going on, something happens, there's a move. But for me, because of the potential, um, for anything to happen, it's just not, it's something where you can have a violent move in the tin price. But if I think about a portfolio, you want to be careful because those moves can be just as sharp down as they can be up.
Well, exactly. I mean, and that's where I want to go with this because what is your downside protection, though, in this case? I mean, we saw the volatility last time around in the tin price, and it's still pretty evident in the chart, of course, but the equities did way worse in terms of volatility. So I'd assume you're not, well, just like you tell me, you're not treating this as a set and forget type of investment.
No,
You're more treating it as a
that's
speculation. So,
irresponsible. Yeah, that's irresponsible.
but how do you manage that exposure of having only one name in the basket without
Well,
risking
that it
losing?
has to be the basket. Like oftentimes, like when I trade copper, right? It's great. There's 10 different, there's probably 30 names you could own, right? And you can say, I'm gonna have a really liquid name, I'm gonna have an intermediate name and develop. I mean, you can do that. With tin, you simply can't. And so I think about it in the context of a broader portfolio. Like, do I want to have 5% of my portfolio, whatever the number is, in a heavily risky, um, you know, play that's going to be, Forex linked to beta or something? Like, that's how I think about it. So I don't think you can say like, oh, I'm going to own Cornish metal, I'm going to own first 10, I'm going to own, and then I'm going to do 15% and 30. Like, I don't think you can do that here. I don't think that's how you can trade 10. I mean, I do think you could trade the contract like that. You could trade the contract however you want because it's so liquid. Um, but I think the equities you just simply cannot, and you have to think about it not in terms of a basket of 10 names, but you have to think about it in terms of your overall exposure to commodities. So it's not a great answer, but it's a minor metal, and I don't think there is a different answer.
Well, what percentage of your portfolio? Maybe that's part of it. I mean, position sizing. What percentage of your portfolio would in your case, what percentage of your portfolio do you have dedicated to tin?
Right now, zero. I've sold all my exposure, like, because I'm honestly at this moment. I think, frankly, gold and silver have more torque. Antimony has a lot of torque. I think I just think there are other places to be right now, um, where you have not only a metal moving, but you also have interest from retail, interest from investors, because that's another part of our sector that's changed. Is
Hmm.
you kind of have to chase momentum a little bit, and if no one is there and the crickets are playing, like, you can't make any money, even if you have the best idea in the world. Like, take fluorspar. We get to that in a minute, but like the supply demand dynamics are epic in fluorspar. And there's this company, it's called Liard, that's going to list. And like I think this should be a great company. It should do really well. But you know what? Like, I don't know. Are they going to have enough of an echo chamber out there, enough people caring? Like, we'll see. So, for tin right now, I don't think the market cares. Really, I don't see like the Tin Baron or whatever out there posting every day. Um, and so I just think I'd rather own silver right now, or I'd rather own copper. So that's how I look at the world. I mean, someone else might look at it differently, but that's kind of how I think about these names, because I think you have to move and be strategic. And even names that you really love, I think you have to sell them and then rebuy them, and cycle it. I think, um, unlike the way that we really should invest, the S&P 500, which is go long, sit there, never sell, reinvest the dividend. I think in mining names, just in general, you have to be much more nimble, because these things can move so dramatically both ways so quickly that you can have your face ripped off if you go on holiday and don't look at your account for 5 days.
Hmm. Yeah. Well, I don't know who you're following on Twitter, but there's a retired industrialist by the name of Tin Investor. That's his handle on Twitter, and I think he's a retired comedian actually, because his meme game is on point. It's
Wait, I have to wait. Let me pull this up right here.
Tin Investor. You should follow this guy. He's
I'm gonna follow
hilarious.
him.
And overall, like he gets it. Like I've spoken to him over DM. Like he gets the thesis. He knows how to play it. He's got
I'll
ideas. So
follow him.
he's a very funny, but he's a serious person. That's kind of my read on it. And then there's another account, Tin Former underscore news. He posts daily as well. Some pretty good stuff on Tin. So he's also a Tin Baron. So those are two accounts that I at least know of. There's a couple of other guys I know who
And by the
also
way, I'm not bearish. I'm bullish tin. I like tin. You see, I've written an article on tin recently. I'm just practical as well, which is I'm here to make money like everyone else. And like, the second it feels like people are piling in the equities, I'll go along, and maybe I'll miss the first 5% of that move, but in the meantime, I buy. I'll tell you this story. Like, at Beaver Creek, I was catching up with a buddy, Simon Cat, and he he was pitching a silver story, Mithril. It's in Mexico, and I met the CEO, and it was just a great story. And I just bought some. I didn't even bought some, and it went from, I think, 12 cents to 60 cents, because silver's super hot. They ended up putting out drill results a week ago or something, and you can only do that in these names when the whole kind of interest retail community are coming together around a commodity. And so, as much as I like tin, I don't think that tin moment is quite here for me. I don't think that tin moment is kind of here. Whereas with antimony, it feels like maybe the antimony moment is coming. But for tin, I like I said, like, I will definitely, I like tin the commodity. I think the future for tin is really dynamic and interesting. I know the names I'd buy. Like, I'd buy Alpha Man. It's a great name. I mean, there's some risk there. It's in a pretty scary part of the Congo, but they've survived so far. So I mean, but so you've got all those things, but I the way I trade and the way I look at these names is you kind of come in when also the momentum comes in, and that means sometimes you give up part of it, but you also then have the capital to do other stuff through a cycle.
Mm. Let's then do talk about antimony, because that's again another one of the commodities that you seem quite bullish on. But as far as I understand it, which again doesn't really say all that much, is that the antimony market is largely at the mercy of China. They dictate the pace of supply, they dictate the pace of demand, they have the most influence over above ground inventories and exports. So knowing all that, why even bother with antimony?
Because you can make money. That's how I think about it. So like everything you said is true. And by the way, it's even worse than that. Antimony's even worse. It's China, Tajikistan, and Russia. It's like the trifecta. Like what? Who else can we throw in there? Um, and on top of all of that noise, China isn't going to export, or they're saying they're not going to export antimony, right? So, or refined antimony. What is antimony used for? Historically, like I'm going to make it up and say, I think it's 2010, 90% of antimony in America was used as a flame retardant. Fast forward today, and like 43, 44% are used for bullets. And so there's a really interesting use. So the use for antimony is semiconductors, once again. So same narrative as tin. Um, Lead acid batteries, the glass for whatever, what's it called? A photovoltaic glass for solar, and then military equipment. I mean, like I'll tell you, you know, if you think about what's going on in Russia with the ammunitions and just how quickly um, it's being drained, and we're pumping through our allies all these bullets in, like it's super bullish. And now you've got Israel and Iran kicking off. You've got a price move which has been, from 6,000 to 20,000. It's been pretty dramatic, and you haven't had equities to kind of be there. So um, I think it's a setup for a great move in equities, and everything I said still applies to antimony that I said about tin. It's all kind of true in terms of it's a minor metal. There's not a lot of supply. Like the last North American mine was in Montana, and it closed within the last few years. And in fact, an interesting company. It'll be interesting to see how they do. Um, it's Military Metals, and these guys just bought the Westgore antimony mine in Canada. So historically producing mine. So I've actually bought them purely as leverage to the story, because unlike tin, with tin you can buy this contract if you want, or you can buy Alpha Man, or you can buy Atlanta. You can buy all these different things. There's not really that contract in antimony, and so to me that sets up for potentially a dramatic move in some of these equities. And it's also really critical. So there's a narrative around the need to potentially build one of these mines or restart one of them in North America.
Hmm. Well, you say you can make money, I say how much, but the prices have already more than doubled though since China implemented those restrictions on antimony. Wouldn't now be a good idea to maybe trim into that for anyone who had a position going into that strength?
And no one had a position because there was no way to have a position. I mean, like hypothetically you would,
Hmm.
but no one had a position because there was no position. In Australia, you had a few names move because they had a drill results that was 1% antimony. So you didn't actually experience that. And I think what you will see now is, and probably there will be some others that do this, but you'll have the military metals come out. They're going to have their projects, and they're going to experience potentially, pretty dramatic moves to kind of catch up. And I think you probably see antimony prices potentially go higher. But absolutely, at some point, if you get in here at, I don't know what it's trading at, honestly, 70 cents or whatever it's at, and it goes to $2 or $3, yeah, you should sell. I would sell. I think you always have to be selling when these names go up. But um, this one is different, and fluorspar actually is similar to antimony in this regard. There is no contract, and there aren't really any names, and so being the first one to market, uh, having a historically operating mine. And then, by the way, this is kind of the true story I can tell you about Flushbar as well. Like, these guys at military, they have this historically operating mine. They're the first to market. They're going to be able to tell that story. There's going to be money to be made in that stock. But as you point out, uh, you get this tape going, you get the antimony price going. If you get in, get out. Like, don't do the round trip for any of these names. And I think that's true in commodities in general.
Hmm. And this might get a little political here, but given how important antimony is to defense and electronics, and therefore defense again, I suppose, how realistic is it for the price of antimony to be allowed, if you will, to rise a lot more from here on out. This is still on a topic of where you said you can make money on it. So I'm trying to figure out how much.
Okay, so that's an interesting question, but it presupposes that the US government could control it, and it can't control it because the US government simply does not have the supply. For another time, the US government at one point had these strategic stockpiles that for all these different metals that they sold off, which was really stupid, but they did that. So they can't control it. And furthermore, because China controls it, really China can control its supply for itself, meaning China says, well, we're not going to send any refined product out. And then, they phone up Russia and they say, Russia, Tajikistan, which is effectively Russia. I mean, it's not Russia, but, the sphere of influence is such that they can control that price, meaning they're going to supply themselves with inexpensive antimony or antimony at a cost. And it's going to put massive stress on the antimony market outside of China. And so that sets up for crazy moves, potentially crazy moves in antimony ex China. These things never last forever. Does it last 6 months? Does it last years? I don't know how long those last, but that dynamic is such that I don't think that quote unquote like the powers that be or the trading houses can actually reel in the antimony price in this geopolitical environment where China holds all the cards. This is completely a China driven market. And so that's why I like it. I love these. I mean, look at cobalt, got in at $8, went up to $44. Look at these metals. You sit here and it's fun. In some ways, it's gambling because we, as smart as we want to sound, make ourselves sound, you don't necessarily know when that supply is gonna, respond. But it's really exciting for these equities. And I like the stories like this would be true of tin. I just don't know the one for Canada specifically, but it is true of antimony. It's like, well, these guys, let's see what they can do. Let's see how well the management team or how good they are. Um, you know, but they have an asset that historically operated, and that asset is sitting in North America. And so, like, they have the best tape that you could ever have, the best setup that you could ever have for a minor metal. Now they got to do what they got to do. They got to go out there and drill. They got to get the right guys in there. They got to hope the tape continues. But I think that setup, is pretty exciting.
Hmm. Well, making myself sound smart is harder than putting a mine into production in Canada, so I don't really try anymore. But what about it if and when the conflict with Russia gets resolved, though? Wouldn't opening their borders kind of flood the market? Is that something you'd be on the lookout for an exiting signal?
There's no question. Well, I think China is probably more important than Russia, but there's no question that this is true of uranium potentially as well, nickel to a lesser extent because really Russia's not as important for nickel as it used to be. Indonesia's taken over. It is true though, a resolution in Russia can definitely bring about changes not just in antimony but in all of these markets. Um, there is though the question mark, like, do we live? I mean, we're like in the halo of the post World War II era, right? Like the people who fought in World War II, it's kind of at the end of their life, and so the collective global memory of the destruction of that war is fading. And we've now entered this period where the world is realigning around superpowers and coalitions. And so, even if there is this resolution with Russia, which I don't kind of foresee on the horizon, for all these metals, you have to think that are driven by rearmament. You have to think that all these superpowers, having just expended all their bullets and ammunitions, are going to continue to want to restock and resupply. And that presupposes, of course, that there isn't something in the Taiwanese Strait and that some larger conflict in the Middle East doesn't spark up. So I think you would want to definitely watch for that. But I kind of wonder if we're not at this moment now where all these minor metals that are heavily controlled by China, um, heavily driven by kind of Chinese policy, if they're not all interesting. And even Tim, we talked about the potential for response. Like, yeah, that's a trading. We're talking about trading equities there, but still long term with that control in China, if that relationship with America and China continues to deteriorate, like why not punish America if you're China and say, hey, we're not going to give you, sorry, tin, just kidding. You phone up Indonesia. China has funded Indonesia in terms of capex for all these big mining projects. China phones up Indonesia and say, "Hey guys, like, no, like we need to cut." So I think that dynamic just exists, and as long as this world remains volatile, these minor metals continue to be really interesting. And you got to be nimble, got to come in, choose your names, get in, get out. But I think there's just a lot of money, and I'm really excited. Like I went in and I bought 200,000 shares, not a lot, 200,000 shares of military metals. I'm long, whatever. I've sold Alphamin, not because of something bad, but because I'd sort of made money. Um, I'll buy it back again when I think the time is right. So I just think that these moves are fantastic, and you can make a lot of money, but just don't fall in love.
And what are they like? Just a couple of names in the antimony space. I mean, there's
There's
the
only
company.
one right now, really. I mean, the only name. I mean, there are some Australian names, but they're not antimony names. They're companies where drilling results for fill in the blank had antimony. So there could be other names that I'm not aware of. I don't spend all my time thinking about this, but that's the one name. And like I said, it's a play on the move. They've got it's historically operating mine. It's in Canada. It's following that narrative. And so it's exciting and yeah, I don't know. I think it's an interesting space to watch for sure.
Hmm.
And you got to
So
treat it as what it is. You don't control that supply response. China does. That means you can wake up on a Tuesday and your stock can be up 4 times or down 90%, right? Like, and you're not going to control that. But I think that's fun too. I mean, I kind of, but you have to treat it inside of the context of your portfolio as such. This should not be your retirement money. This should not be, the kids' education. I mean, you got to really respect minor metals for the volatility, the extreme moves that they are, because you're going to win big, but you're going to get absolutely smoked, taken out of the kneecap sometimes too.
hmm. If you don't understand it, don't do it.
Yeah, I think that's so true.
What else? What else are you bullish on outside of these, and maybe specifically in this show is specifically called energy transition talks. So that's kind of what we're talking about here. I get your bullish view on silver, but what else? What else are you bullish on within the energy transition topic?
Well, just 2 seconds. I mean, Fluorspar. It's another one. Go pick a
Right.
name. Like literally, Fluorspar. If I told you the Fluorspar, it would be identical. It's used in electric vehicles. China controls the refining. I mean, it's absolutely identical to the three of these. There are no good names. There's one that's going public called Liard. At some point, I don't know. This fall they have an interesting project in Canada, actually low capex. That's potentially interesting, uh, but that narrative follows exactly everything we just said, and so potentially if that team is able to market that correctly and talk about that correctly, I think there's potential there. I think we got to wait and see. I don't know. I don't know who the board will be. I don't really know, but I think there's potential there.
What
If
is
we
it
step
used for? I see acid production, steel making. Acid production is like 60%, steel making 25%, aluminum, ceramics, welding, and others is the rest of
yeah, and inside
15%.
of electric vehicles, it's like slowly being used, inside of and by the way, there is some like that's a whole topic. Like there is some fluorspar in Mexico, but like they're kind of reaching the end of the rainbow there. I would say, unlike tin, which I'm not aware, someone can correct me, but I'm not aware of like great tin deposits in Canada. Each of fluorspar and antimony have the potential in North America. You've got military metals project they're trying to do, and then you've got Liard potentially. So I think one difference for these two is, and maybe this actually I hadn't thought about it this way, but maybe that's what could make these names interesting is, with tin, because you don't have, at least I've not heard someone telling me this narrative, like I'm rebuilding this tin mine in Canada. So you don't have that narrative for tin, although you do have some European plays like Cornish Metals. Potentially for fluorspar and antimony, there are a few projects that potentially could receive investment capital, making them interesting stock plays, right? So you can have that leverage and torque to the big moves. So that could be actually an interesting thing. I have to go back and kind of think about that.
Hmm.
But if we step outside of the minor metals, like how can you not like uranium right now? It's all of a sudden you have uh, complete capitulation by the left in terms of its damage to the environment and all the rhetoric. And now the only way to move forward with green is uranium. And so I, uh, I think there's always this question mark around how much supply has been bought by hedge funds and corporates, and will that come into the market? Yeah, I don't know the answer, but notwithstanding that for a moment, just the complete narrative around uranium is it's pretty exciting, really. As people have finally decided to embrace that technology after what's been a long kind of hiatus.
Yeah, it's interesting, by the way, that you mentioned these two together because apparently, and I didn't know that up until now because I'm just now looking it up, but fluorspar is used in the preparation of uranium fuel. So it says on here, quote, the industrial preparation of uranium hexafluoride, uranium gas, I suppose, requires both elemental fluorine gas and hydrogen fluoride, HF. And so HF is prepared by the reaction of sulfuric acid with fluorspar. So you can't have uranium fuel without fluorspar. Fluorine gas, in turn, is prepared by the electrolysis of HF. So there you go. The more you know.
Yeah, and it's overwhelmingly produced by China
Mm,
and Mexico and Mongolia. So
that's right. Yeah.
it's kind of and this actually speaks to really this broader sort of moment for commodities, which is Australia and Canada, like they were the place for commodities for a long time. I mean, they were building mines and doing all, and their economies were built on. I mean, Canada was built on mining and timber, right? It really was. And then for I don't know if it's political reasons, I don't know if it's kind of NIMBY not in my backyard. I don't know what the exact reason was. They've completely moved away from it. And by doing this, they've taken this really major power shift and given it to China because China has used its balance sheet now for more than a decade to go around the globe and fund critical minerals. And I don't mean that like the definition. I just mean they've gone and funded everything that they've needed for their economy, and they control that supply. And in the West, we just haven't done that. We haven't used taxpayer money by and large to go out and do this. Um, and we've missed a huge opportunity. And I think that for some of these metals, that probably it'll be the bull market, whether it's fluorspar or whether it's, the fluorspar guys when they go public, whether it's antimony, whether it's tin, or whether it's all of them, I don't know. But look at uranium. Russia has all the underfeeding, right? And just today, I don't know if you saw this, but ISO announced that it's acquiring Anfield. I saw um,
Yeah.
acquiring a potential project, with the mill in the U.S. So, that value where that's, I didn't think there was like a 35% premium. I don't know. I just read the headline. So a massive premium. So, um, you're seeing this lack of funding is going to come back to haunt the West, and that probably sets up a really interesting bull market for names that have quality projects in the West that manage to make it through the barrier of getting funded, notwithstanding all the challenges.
Yeah.
And that's kind of interesting.
Uranium is a topic in and of itself that I think we can definitely have a whole podcast on. But I'm hoping I'm gonna have you back on sometime soon and talk about some of the other stuff that you've been writing about, which I think are interesting. I'll have to let you go now, but what am I forgetting to ask you here at the end, Anthony? What do you think we should be talking about?
No, I think you know what I would tell everyone. Everyone knows about the big names, the copper, the silvers, but go out and have a look at these minor metals because they have a fantastic setup with geopolitics and everything that's going on. Don't fall in love. Go there, make some money, and have a good time. But buyer beware. But there's some action in these names.
And you're right, actually, but you bring up a good point there at the end. I tend to ignore those smaller metals too. So I'm glad you're kind of reminding me of them. Thanks again, Anthony, for joining me on this episode of Energy Transition Talks. Our time is up, so I'll have to let you go now. Feel free to drop off as I have some CEOs to grill, but not before my favorite part of each episode, and that's, of course, the warning. It is a disclaimer. There is, right after the disclaimer, I'll jump over to the CEO barbecue portion, of course, but the warning that's on your screen right now, you're obligated to read it, but you're also just better off doing so because this is not just some disclaimer. This is an actual warning. If you read it and understand it and actually take it seriously, it might help you not lose money, which, by the way, is the norm, should be the expectation in this sector. That's the reality of our sector. And money is part of it too. I am here to make money. I make money from the existence of this channel and specifically from companies paying for the production of these interviews. Now, American Pacific, specifically in this episode of Energy Transition Talks, is a paying client. They have paid for the production and publication of their interview. That still doesn't mean I've sent any questions up front. I haven't. I never do it. There's three simple rules to doing interviews on Resource Talks. There's no questions up front. There's no questions off the table. I get to ask whatever I want. And there's also no editing rights. But that doesn't mean you should look at this episode or any other episode any different, because even the companies that are not paying, and even though I don't send them the questions up front and all these things, they're still likely seeing their participation in this program as a chance to do some marketing. So start by understanding that company communications online, whatever else it might be, presentations, websites, even their news releases, everything out there is marketing. And although I don't make buy or sell recommendations because there's a clear conflict of interest in my opinion, many out there do. And you should be aware of that. That even when some seemingly unbiased Twitter account or whatever else it might be is talking about a company, that could be marketing. Many out there will take money from the companies and also make buyer recommendations on the back of that. So be aware of that inherent bias. That bias is not always going to be clearly disclosed. So it is safer for you anytime you're watching any type of company specific content to approach it with a dose of skepticism and treat it as marketing. Unfortunately, I'm not a magician. I don't even know a magician. I think I met one day, but then it turned out to be something completely different. Now, the guests here are also not magicians, and some of the CEOs are even normal people. So we don't know what's happening. Okay. We don't know what is gonna happen. We don't possess any superior knowledge about what's gonna go up, what's gonna go down, or what's gonna go in circles. Also, unfortunately, try as I may, this show is called the CEO Barbecue. I get to ask whatever I want, but I'm not always going to be able to catch all red flags or all challenges or all shenanigans or whatever may be going on. And I'm not always going to be able to push back. Although you shouldn't tell my wife this, counterintuitive, I was going to say, I still have no idea what I'm doing. And as I like saying, I've only had facial hair for a couple of years now. So I also lack the experience. This is all to say that you shouldn't blindly trust me, or for that matter, anybody on the internet. And you should just do your own research. And again, if you don't understand it, don't do it. That's what Charlie Munger used to say. Rest in peace. And so, in addition, no guarantees are going to be made here. Besides that, there will be forward-looking statements in these conversations. Those are conversations that are general and impersonal in nature, containing hopes for future events that may or may not take place, depending on many different factors, both within and outside of the company's control. Again, nobody can control the future completely. Be aware of that. Be aware of the inherent risk of investing and the increased risk of investing in non-revenue generating companies that operate in the harsh reality of the mining and exploration business. And please talk to someone who's proven to know what they're doing and talking about like a professional investment advisor, as well as even when you do, still do more research before taking any decisions by visiting setterplus.ca, where you'll find the company's official filings. If you don't do that, your capital is at risk. You're highly likely to lose your money if you don't know what you're doing. There are disclaimers on your screen right now. If you do not enjoy losing money, read them and be careful out there. Well, all that said, though, I am actually kicking off the CEO barbecue portion of this Energy Transition Talks episode by traveling to Western and Northwestern US. But instead of going to the beaches of California, where a normal person would, I'm actually going to the Nevada deserts and the icy beaches of Alaska, where I'll be looking for precious and base metals. Luckily, I won't be doing any of that alone, as I'll be joined by Warwick Smith, the CEO of American Pacific Mining Corp. Again, this company has paid for the production of this interview. The company is listed as USGD on the CSE in Canada, where an average of about 150,000 shares trade each day. And I see a 52-week high of almost 39 cents and a 52-week low of 11 cents, with a market cap of a little over 33 or a little under $33 million, actually, and roughly 220 million shares outstanding. Today, this is a 15-cent stock. In addition, there are 18.5 million warrants and over 13 million options still outstanding, leaving us with a rounded up 250 million fully diluted shares. Michael Gentile would be a name most of you would know since Michael is a friend of the channel, and he owns 12% of this company, while another 15% is parked in the hands of Merck, Ixios, Paulos, and Intact Financial, which are institutional investment groups. The last officially financial statement covers the first 6 months of the fiscal 2024, which ended on June 30, and it shows me just over $7 million in current assets, most of which $6.6 million to be specific was cash and cash equivalents at the time, with of course some prepaid expenses and some account receivables on top of that. Total liabilities sat at $2.7 million, most of which made up by a $2 million current liability, which in and of itself was split between account payables and a current portion of the lease obligation in respectively and roughly $1.5 and $0.5 million. The non-current or long-term liabilities were made up mostly by a $500,000 lease obligation and not much else. For the 6 months that ended on June 30 this year, the company spent about $1.5 million in total on what I would call administrative expenses, leaving them with an average administrative expense of $260,000 a month. Almost 45% of that money was spent on consulting, professional, and director fees. About a third of it, so 33%, was spent on shareholder information and investor relations, and just over 10% on general and administrative, leaving about 15% for various other costs, including financial costs, travel, regulatory fees, and stuff like that. As to the exploration and evaluation costs are recorded under Note 5 in the financial statements, and they show over $2.5 million for that 6-month period, which is an average of $425,000 per month. Drilling represented at almost a third of that cost, so 31% to be specific. Another roughly a quarter was represented by field and geological work. Field administration was about 10%, and transportation was about 5%, with various smaller expenses like travel, technical studies, samples, and so on and so forth, and a royalty payment making up the rest of that cost. So in terms of ratios, 260 on administration and 425 on exploration. And so a total average cost for the last reported 6 months of about $690,000 a month. And it means that over 60% of the money went into exploration and evaluation, and specifically 38% into administration. So that's a 1.6 on the exploration to administration ratio chart. As always, though, please understand that this financial statement is nothing more than a snapshot in time, in this case, specifically at the end of June of this year, and it simply shows you what the finances look like on that exact date and nothing more. Finances, though, are a fluid thing, and math is hard, if you're me at least, so I could be making mistakes in my reading of them, and you shouldn't really depend on me or anybody else on the internet, but instead, by the time you're watching this, you should visit the company's website as well as setterplus.ca to look at the most up-to-date numbers yourself and make sure you're getting the full picture. For American Pacific, that full picture is rather full. It's rather large, and it's focused on multiple metals across multiple states. More specifically, they're looking for base and precious metals across Nevada, Montana, and Alaska. And a primary focus for 2024, as far as I understand it, will be the Madison Copper Gold Mine, which is located close to the Butte Mine in southwestern Montana, which they acquired from Medicine Metals about 4.5 years ago now. This is a past-producing mine, which, although briefly, so it really only produced for 4 years, starting in 2008, it produced almost 3 million pounds of copper with some noticeably high average grades that are probably on your screen right now. And recent exploration efforts have revealed significant skarn mineralization with copper and gold, particularly in the replacement zones, which might be important considering that previously the focus here was mainly gold. So they thought this was just a gold mine, not necessarily a copper gold mine. APM now owns 100% of this mine, though, after Rio Tinto decided not to go forward with its joint venture on it, which is something I hope we can touch upon later on in the conversation. But the 2024 plans for the company now are to continue exploring for high-grade copper and gold potential, particularly in those skarn zones that I mentioned earlier. Phase 1 of that drill program has now been completed, where 4 of the, in total, 7 holes were just reported just recently last week, showing 12.3 meters of 10.3 grams per ton of gold and 0.88% copper in hole 6, 22 meters of 0.63 grams per ton gold in hole 7, 2.9 meters of 3.17 grams gold and 2.4% copper in hole 8, and 3.6% copper over the first 8.14 meters, 30 meters of 2% and almost 10 meters of 1.5%, as well as almost half a gram gold in hole 9. All of those were in hole 9. So there's clearly some variability. There's some high grade for sure. But this project is likely to be part of the focus or the main part of the focus later on in the conversation. So I won't say too much about it right now. And instead, I'll move over to their other focus, which is all the way up in Alaska, specifically the southern tip of Alaska within the Alaska Range. And it's called the Palmer Project. This is an advanced stage copper zinc project. It's a VMS project. It has a PEA on it, although it dates back to the rampant inflation times, if you will, of 2019. And it shows a post-tax NPV 7 of 266 million US dollars and a $280 million pre-production capex. But only 4 of the 16 known VMS showings were included in that mineral resource. So basically, not basically, but most of it is not included in that resource. APM initially got this project in its acquisition of Constantine Metals, and Palmer is currently held in a JV with Dowa Metals on a roughly 70-30 basis in favor of Dowa, but American Pacific is the operator of this project, and in being such, it collects a 7% management fee. APM just completed the 2024 drill program at the project in late August, so there will be more news on this project over the coming months, and hopefully this is also something Warwick and I can talk about later on. Now, in addition to these 2 main projects, there are 4 more projects in the portfolio. As I mentioned at the beginning, Nevada is here in the mix. So all of the 4 projects are in Nevada. So maybe there is a strategy to be discussed here too. But as far as I understand it, they're not the focus, although I hope to be able to ask a few questions about them going forward as well. However, I feel like I've heard enough of my voice, at least for the time being. So move forward to shutting up now and opening the interview here, Warwick, with one of viewers' favorite questions, really. But who are you and why should I trust you with my money?
No, that's a great question. Thanks for having me on. Much
Pleasure.
appreciated. Yeah, I've been in capital markets since 1999. Had the good fortune of working on some successful deals when I was early in my career. Some Fortuna Silver is a great example. Worked on that from when it was a shell. It's $1 billion some odd company now. Northland Resources with similar results early on there as well. I've been running American Pacific since March of 2018. In 2021, the Wall Street Journal Mining Index ranked us the #1 performing gold stock globally that year. Um, was lucky enough to be nominated by S&P Global Platts for Deal of the Year, CEO of the Year, Deal of the Year twice, actually, Rising Star Company. So we've had some success along the way. It's been a tougher market these past couple of years, but certainly one where we remain focused and remain driving the assets ahead. I think the thing that maybe sets us apart a little bit, and it was good that you go through those financials. I think that actually works quite well. The addition to that is this: when you look at the LLC financials for Palmer, which is the combination of American Pacific and Dowa, last year, $26 million was spent on the Palmer project by our partner, and this year, $17 million in exploration was spent by our partner. So not a lot of $30 million market cap companies out there having, $40+ million spent on exploration in the last 2 years by their partners alone. So I think that's probably where we separate ourselves a little bit from the herd.
There's no insider ownership noted on that presentation. And when I ask why should I trust you with my money, what makes it easier for me to trust you with my money is if you trust yourself with your own money. So how much of the company is owned by insiders? How much of that is you personally?
Yeah, I mean, between myself and my wife and family, I think we own about 4.5 million shares. We've written checks into every single financing that's been done. Everyone, perhaps except one where Mike Gentile came in on his own. That was the one where it was just one single
Hmm.
placement. But yeah, we're significant shareholders of the company, bought in the market and in private placements as well. And since 2018, we've never sold a share in the company.
Hmm. What would you say your average cost of capital is? And why I'm asking that is not because I want the exact specific number, but mostly wondering about is there founder shares? Is it like how aligned would we be if I bought stock today at
Yeah.
15 cents?
And I'm doing one of these because I don't know the exact number, but it's in that 30-cent range, is where my average cost is. Yeah, I think we had founder shares when we started the company. I'm going back to 2018. So
Hmm.
I think it was around 1 million shares at that point. But the rest has all been bought either in a private placement or in the market.
Okay. Yeah. Well, so you're basically underwater now on your shares. Yeah. Okay. Well, so
Yeah, I mean,
you're
I think as CEO, when you're doing these things, you're, you know, we're not unique in this. I mean, there are guys who do trade their own stocks, but I think for the most part, I think most guys in my position, you buy this and you hold it for an exit at that point, right? I mean, there's lots of opportunities to buy stocks that you're not a director of and be able to trade them like everybody else. But it's sort of my opinion that if you're running the show, you want to own it and hold it, right? And align yourself with shareholders that when there's an exit that you all benefit at that point.
yeah. I do think your wife and my wife could be friends though, because they know what it feels like to be underwater.
Yeah,
For
that's probably true. Yeah.
is there anything else in place that might compete with that interest, as in royalties? Do you have a royalty on the project yourself or anyone within your family?
No, certainly not. No,
Okay.
no. Yeah,
Well,
just shares in the company.
that's fair. The stock has gone through a lot of volatility since you listed the
Mhm.
company in again what 2018, I believe.
Yeah.
But even more recently, from the summer of 2021 to the beginning of 2022, it kind of went from 16 cents. It spiked up a lot to almost $1.50. So it was an almost a
Mhm.
10x. But now it's back down to under 16 cents. Is that market related? Is it company specific? What's happening? What's causing this volatility?
Yeah, I mean the volatility's been it was enjoyable on the way up and then frustrating on the way down, right?
Yeah.
But you know, similar to a lot of companies, I mean, our chart is it was an outlier in 2021 because we ended up being the number one performing gold stock. So it was an outlier from that standpoint. I think as it's peeled back, it's matches a lot of the charts that are out there. Look, in a high gold environment, you know, high copper, high silver environment, everyone's excited, but we haven't seen that translate to the juniors yet. I've been had a bit of a different take on this. I was quoted in an article in Kitco recently talking about this a bit, just saying that my take's a little bit different. A lot of people have been focused on the price of the metals and that that's what's going to rise juniors. It's been my feeling for some time that it's going to take a more risk on market, and that risk on market will arise both junior mining companies, but you know, tech, biotech, and everything else as well. I think long gone are the days where there was just this junior mining investor that we would have seen back in 99 2000, those that last sort of bull run in the early 2000s. There was certainly a big group of people who just invested in junior mining. That was their wheelhouse. That's what they did. I think with the advent of the internet and the propensity for people to get online and understand more about stocks, they've become more fulsome investors. Well, they'll trade what's moving at the time. So your basket of junior mining investors was probably this big before, but now it's quite small. So you got to be able to appeal to that whole broad base. So I think in terms of what we're looking for, in terms of not just for American Pacific, but for all juniors out there, is this more risk on market? Now, maybe that comes in November with a potential change of presidency down in the US.
Hmm.
Maybe it doesn't if it goes the other way. So time will tell. That higher gold price is it's certainly helping, the seniors, and it's going to help the mid tiers as well. And as we start seeing more of those takeovers where the large cap companies are taking over mid tiers or mid tiers start taking over juniors, that influx of capital will certainly help. But I certainly think that it's going to be more of a risk on market that's going to move all boats. Sorry, that was kind of a long-winded answer, but I hope that helps a little bit.
Yeah, no, well, I hope you're right. I was mostly after again the volatility in your company, trying to figure out if it's company specific. But you're right. A lot of the companies I interview have also gone through similar volatility. Let's go back a little bit to what you said and talk a little bit more about you, because another important part for me here when I ask you why should I trust you with my money is outside of that is experience specific to the task at hand here, which we're going to
Mhm.
talk about here. It's supposed to focus is going to be on the Madison mine, but what is your what specific experience do you have for the task at hand here?
Yeah, great question. I mean, I think the best success I can point to has actually been through the American Pacific experience. I've worked on a lot of companies previously from quite a young age. I mean, I think I started when I was 21 or 22 in the business. So I've been around some good successes, a couple of them that I've mentioned. But being here and being able to work with some of the larger mining companies in the world, when being, we've worked with Oceana Gold, we've worked with Rio Tinto, we're working with Dowa Mining and Metals. Dowa is, I think they do $2 billion a year in smelting. we've been able to attract some of the largest mining companies in the world to partake in what we're doing. So that's been incredibly helpful. And then surrounding myself with good people that, accentuate my skill set. So Eric Saderholm, who's my business partner on this, is the former head of exploration in the Western US for Newmont. He's really our strategic advantage down in the Western US. Ken Cunningham as well. So Ken ran Miranda Gold for years, as a geologist who lives in Reno as well. They're both excellent resources for us. And then we've really grown this company based on M&A, which has been a little bit different than most companies. We believe in M&A in the space. Certainly when the stock was doing well, it made it easier for us to go and transact by taking over things like taking over the Madison Metals company to bring in Madison, and then taking over Constantine, so we get the ability to bring in Palmer as well. Certainly a bit of a head nod to Michael Gentile there as well, because he was the major shareholder of Constantine, and was sort of looking for somebody fresh to come in and take a look. So he was certainly helpful in that transaction as well. So that's a little bit of my background. Bringing in Mike Gentile as a big shareholder was quite smart as well. He's been an excellent shareholder and incredibly helpful. So that was certainly a move in the right direction for the company there too. From there, we've been able to attract some pretty good investors along the way. You mentioned some of the funds that are in. Broma Asset Management is in as well, along with numerous others. So we've got a good base of both retail and institutional following. And we've been able to deal with some of the bigger mining companies of the world, been able to raise capital when others haven't. And we've been able along the way to get excitement from the market. And that's something that we'll look to do again here as we get into a better market.
And that is something that I want to talk about, as to how you want to get that excitement out of there. But let's before that talk about how you're trying to have something to show for it. And again, that's on the focusing on the Madison mine, I suppose, it will be part of the answer. But where do you go from here? I mean, you just had some news coming out of Madison. Where do you go from here? How do you follow it up? And what part of the project are your future efforts going to focus on?
Yeah, great question. We love that Madison asset. We had a great partnership with Rio Tinto when we bought the asset, and Rio were a fantastic partner, helped us advance that asset. They got to a point where they didn't have budget for the project, and we were able to get 100% of it back. And it was, we were pleased to get 100% of the project back, but obviously disappointed to see Rio go. We enjoyed working with them. They were a great partner. But what it's allowed us to do now is go after it in kind of a more aggressive manner, and drill where we'd want to drill and push the asset forward. Rio being there, they're obviously looking for something big. And by year two of dealing with Rio, one of their comments to us was the skarn was a Rio Tinto sized target on its own. So that got us excited. So being able to go in and drill aggressively at that skarn was something that we wanted to do in this first campaign. And now we've got phase 2, 2B, and 3 planned out on paper. We'll move holes as we drill, as you always do. But we're fully funded for phase 2. So we're going to start that phase 2 starting in probably January is a likely scenario. Right now, we're flying a radiometric survey along with doing some sampling off target where there's been no drilling done before. So we'll have those things that are going to go within to that 3D model to get us ready for drilling as well for that January campaign. But we're fully funded for that, so we're ready to drive that forward. The nice thing here is no one's ever really looked at this asset in kind of a holistic manner where you're kind of saying, okay, there's been mining here, there's been mining here, there's been mining here. No one's ever tried to put it all together. And that's something that we want to do. We've got 53,000 meters of drilling that we can pull from in terms of data. So with phase 2 and phase 3 completed, which will take 18 months to 24 months, at that point, we'd like to be able to put a resource together and then make a decision if we're going to go towards a feasibility study at that point. So that's the pathway for Madison for us. And that's exciting. That's a project that held some tremendous grades, has got this opportunity to be a very good size skarn in the eye of like a Fortitude, which is now owned by Newmont. That was a 2.5 million ounce skarn. And then they drilled down into a porphyry, which turned into a 25 million ounce gold deposit. And I think it's 3 billion pounds of copper. It's a massive deposit. We look at Madison as an analogy to Madison, obviously much further ahead. When Fortitude started, it was 200,000 ounces at surface. They started to understand the topography more and vectored down and turned it into 1.2 million ounces. And they figured there was a thrown down block that turned it into 2.5 million ounces. And then they got into the porphyry. The nice part about that is Eric Saderholm was chief geo there. So when we first went underground at this project, the first thing he said to me is, "This looks just like Fortitude." So that was a pretty good way to get your CEO excited for sure.
That's there's lots to talk about there, and I think we have or we're gonna have kind of a geo deep dive scheduled with some of your technical guys so that I can
Mhm.
talk to them about some of these rocks. But mentioning Fortitude reminds me that I wanted to ask about what you think about how much potential do you think lies beneath the historical workings, though? I mean, is there any specific internal number that you're comfortably discussing, or like how are you guys thinking about this?
I'll be careful on internal numbers. But obviously we're looking at this, we want to continue this work and put a resource on this project. We think it can be a plus million ounce deposit. We think it can be larger than that. But we certainly think it's going to be plus a million ounce deposit once we've done all this drilling with success. So I'll be cautious on how I say it. But we're certainly not going out looking for something small. We want to look for a big deposit. Where this gets incredibly exciting is the porphyry potential. So before we got involved, the predecessor company drilled into the porphyry, into the latite porphyry to show that it was there. Now the portion that they hit was unmineralized. But when you look into Montana and you look at porphyries, you think of the Butte mine, which isn't far away, which is in the same Radar Creek Luton. So you've got this ability to have these massive porphyries. This is an incredibly high grade skarn, and that high grade is being pushed from somewhere, which one would think would see a heat source down below, which could be the porphyry. The question is, where is it? So we've got some deep targets that we certainly want to go after and drill into, and that would obviously blow the lid off this if we can hit it.
How deep was the portion that they hit, and how deep do you want to drill it?
Yeah, great question. I'll defer some of that to Eric, but I think they were down about 800 feet, 800 to 850 feet is where they hit it. So it's not all that deep in terms of a porphyry. Butte obviously goes down a lot deeper. I forget their final depth, but they go down quite a bit deeper. But once you're into it, and if you know it's mineralized, then you're in a position where you can really afford to go after those, spend the money on those deep, deep holes.
That's 850 feet. So it's like
Yeah.
250 meters.
Correct.
Okay. Yeah, that's not
Yeah.
deep. That's
No,
why I just
no,
wanted
it's
to
not.
confirm.
Yeah, I mean some of the holes we drilled in this campaign were almost down 200 meters as well, right? So we're not going down, some of these porphyries can be quite deep and they can be incredibly expensive holes, but we do not believe that's the now. We'll see. We'll probably want to drill some deeper shot holes, maybe down 1,500 feet as we get into it. But again, the rock will tell us that as we start to get into the drilling.
Right. Well, I have it on here to ask about alteration packages and structural complexities, but we'll do maybe Eric and I will talk about that more in depth. How this phase three drill program that you say it's going to take what 18 months, right? Um,
Yeah, so we finished phase one. We'll start phase two in January of 2025, roughly.
Okay.
We'll get in and do some drilling there. We like to get in, complete X number of holes, put those into the 3D model, learn what the rock is telling us, and then start our next phase. So we'll go kind of 2A, 2B, and then phase three. And part of what we're going to show coming up here in a press release that we're going to release in the next little while um, is how the structure stretches over a 7 kilometer strike length. And that's something that we're going to show visually and kind of walk people through what the game plan is and where we want to drill to start in phase two, 2B, and then three as well. Three will be the more regional one where we're going to really stretch out. It's interesting here because we talk about the Madison mine, which is where a lot of the drilling has been, but there's a Hudson, a Broadway, an Ajax. There's a lot of these I say smaller mines. Broadway produced 140,000 ounces of gold just out of the oxides. So there's these mines that are close to us, but each company that came in kind of focused on something different. For example, that Broadway, they were focused on the gold, but just the gold oxide. Anything that was a sulfidic, they would have left behind. Any of the copper, they would have left behind. When Coronado was putting the Madison in production, they were really just going underground and kind of following their nose. If you see that, there's a video that I put out of myself being underground, taking some samples. I mean, you can see I'm right at massive sulfide where it's bright blue. It's fairly obvious. They were literally going down and finding these pods and then taking that and putting it through production, leaving everything else. Once again, not touching the gold, not touching any of the oxide. So you've got this kind of interesting deposit that has all these different ore types, but groups that were coming in and kind of, again, following their nose, taking what they could process at the time or what they were focused on, but leaving the rest. So part of what we need to do is drill around those old mine sites, see what's still left, see what was untouched, and put some densities, et cetera, to that, and put that into a 3D model. That's going to help us when we go to put a resource together. So that's part of phase two. 2B will be more regional, and then phase three will be a full regional approach.
It's a great overview. You're kind of saving me a couple of questions here, and then
Okay, good.
I'm supposed to be pretending that I'm working, like my wife thinks I'm working. But so phase three done by Q1 of 2026. Does that sound reasonable?
I'm not sure.
Okay.
It's just the honest answer. We'll get into it and see. These things can change, right? You can
Mm.
get into it. You can have great success. You can have some misses, and you'll kind of make those decisions as you go. I'm kind of giving ourselves 18 months to 24 months to complete both.
Yeah.
So we may need slightly more time than that.
Okay.
But at the end of
So
that, you're getting a resource, and then you're getting an opportunity to make a decision on feasibility, right? So you're really advancing an asset in a relatively short period of time. And the other thing is, it won't cost us all of that much to do all like we've finished phase one. It won't cost us all that much to do phase two, which we're fully funded for. We'll probably want to raise some capital before phase three, but call that a year out. You're probably looking at, a total of $6 million US to complete this drilling. And then at the end of that, you can tack that in with the 53,000 meters that you already have and look to start to put a resource together on that.
I'm just scratching question after question because you're answering them before I've even asked them. But that's
Perfect.
where I wanted to go with this. So it's essentially 24 months would be Q put you into Q3, I suppose. Yeah, of
Q3, yeah.
2026. And then you
I
want to
think
have a
that's
resource at the end of that. So that was kind of the important part that I wanted to hear is when do you want to have that resource out and how much money that's going to cost. So you're saying $6 million and Q3 of 2026, and you have a resource out.
I think those are reasonable estimates at this point. Now, if we're sitting here in 2 years' time and I was 2 months early or 2 months late, then you'll have to forgive me. But I think that's a pretty
Yeah.
fair statement.
Well, I think estimations are generally hard in the space. Like I know investors want
For
you to
sure.
give them, they
Yeah.
don't always work in your favor, and so it is hard to give them. And so again, so for people listening, take it with a bit of a margin on there as well. So,
Yeah, I
well,
appreciate that. I always try to, project what we want to do. But man, so much can change in this business, as we both know.
mm,
So I'm always a little bit cautious, and I'll always try to throw a little bit of a caveat in there that, these are best estimates sitting here today, right?
yeah. When you talk to your current shareholders, including Michael Gentile and some of the institutions, what are they saying? Do they want to fund that work? Does it look like they're going to be coming in the financings to get to that $6 million?
Listen, I got back from Toronto yesterday. Just did a short trip out there, primarily to meet with one of the bankers who helped us with the last financing that we did. And it seems there's good appetite there. We don't need capital today. Wouldn't particularly want to raise here, but that's always the way. You always think you can be higher than where you are, but nonetheless, we've got enough capital for phase two. Excuse me, but there's certainly demand for it. People were pleased with the numbers that we put out from phase one. It's always been this project that's kind of intrigued people, and now that we have 100% of it and kind of run it on our own time frame, I think that puts us in an advantageous position where we can create more excitement with this project than we have been able to in the past.
Mm. Or
So short answer is yes. Yeah, I think there's demand there for, guys want to see us move this asset forward. We really feel that this is the lead asset for the company, and there's an awful lot we can do with it. And there's a lot of excitement that you can create with this asset, especially as you're pushing it towards a resource.
And so you have a plan. You feel
Mhm.
like you can get the money. What about permitting? Did you have to get any type of water rights or anything else that you have to think about now so that you can do all that work?
No, we've got good access to water both on site and then from one of the rivers just down that we've used before. So water is not an issue. Permitting hasn't been an issue for us at all. We work with the DEQ and BLM out there. They've been good partners to work with. We've had no issues getting permits. Um, this was our first campaign drilling it ourselves. It was Rio drilling before. So I say that I have to say that with a pinch of salt because it was Rio that was dealing with it. But Rio never had any issues. We certainly didn't have any issues with them this time around. They were good to work with. Um, you go into these things and you try to do it right and you try to, keep the agencies happy and show them that you're professionals. And, I've found in the Western US, they work along quite well with you. And that's been the case so far. We're going to permit for phase two. So here we are. It's October. We'll be drilling in January. We'll be well permitted before that. The bulk of it is already permitted, although there are some sites that we want to permit that go outside of our disturbance. So we'll permit those.
Yeah.
But typically up there, it's going to kind of take you 6 weeks to get a permit, maybe 8 if it's slowed down, something along those lines.
How many pads do you have to permit on top of what you have now?
We're gonna permit 7 pads, and I think 5 of them are already permitted. I believe it's 5. If it's not, it's 4. So 2 or 3 pads to permit.
Okay. Yeah.
Yeah.
Well, why'd the mine ever stop producing, by the way, in the first place? I mean, it really only produced for 4 years or so. So how come?
Yeah, it's such an interesting question. So it was in a company by the name of Coronado. It's actually when I first saw it. I went down to look at this asset in 2016. I'm happy to give the story. It's got a great history and a great story to go along with it. Coronado had it. It was an interesting public company. It was 40% owned or roughly 40% owned by Tag Oil, of all, you know, it was just a bit of an odd one. I'm friendly with one of the guys at Tag. They had called us up and said, we've got this asset down in Montana. We've had it in production. We want to get out of mining. We're going to do something else with the vehicle. Do you look? So we went down and we took a look at it. We really liked it, but another company bought it out before we got a chance to even really bid on it. And they came in and did some great work. So that point, the production had stopped. Another group came in, thought we're going to drill this and look to make it bigger. They drilled it. They did good work. I mean, they drilled 61 meters of almost 7% copper. They drilled it was 25, just under 25 meters of 30 grams per ton gold. And they drilled into the latite porphyry. At which point they brought in Rio Tinto as a partner. And I'm going to say it was like April of 2019. June of 2019, they halted from trading. So 2 months later, and announced that they were becoming a psychedelics company focused on medical mushrooms. So called up their CEO, who I hadn't met before, and said, "What are you going to do with the mining asset?" And he said, "I think we're going to keep it private." I said, "Well, look, sell it to me. We'd love to keep going. We've already diligenced the project because we'd been there and we knew it. And seeing Rio come in certainly helped our diligence, and we were happy to work with them. And so we were able to buy the asset for $2.4 million worth of stock at the time, for which S&P Global Platts nominated us for Deal of the Year. Now we didn't win. Cleveland Cliffs won that year, but they did two $1 billion transactions, so we were in good company. So the asset's got a very unique history, a great story to go along with it, and so now we're looking to go and expand it and create some more excitement with it.
Well, talking about the history kind of the region, the Butte mine, which you model after, and which again, as I mentioned, the overview isn't too far away from Madison. It was discovered in the 70s, I believe. Why do you think they missed Madison or the extension of Madison? And what are you
Hmm.
doing differently that will increase your chances of finding it?
Yeah, that's a great question. So Butte, as I understand it, and this is a great question for Eric because he answers this incredibly well for when he's on with you. But Butte was actually kind of sitting at the surface for in terms of a porphyry, like it was poking out at surface, and they were able to find that, dig into it, and see how big it was. I mean, it's a
Okay.
enormous. I think it's the third largest porphyry in the world, if I'm not mistaken. So it was very easy to find. Now, this was an area where you're getting the skarns close to surface, right? So you had the Broadway, which was in production from the late 1800s to 1940s. That produced 140,000 ounces of gold. You had the Ajax, you had the Hudson, and now you have the Madison that kind of work its way into modern times. But they were these kind of smaller pods of mines. A small 140,000 ounces of gold is a decent size. But you had these, but no one had ever gone for that deep potential. All of this mining has been done really just kind of what's in front of your nose. They would go down and mine that and then move on. So when we came in, and looked at it, and the initial conversations with Rio were, let's tie it all together, right, and put a resource on it, and then take some deep shots and what have you. Rio has ended up moving the vast bulk of their budgets down to, I forget the asset now. The North American manager changed, and he went down to Mongolia. Great guy. Um, Anyways, some of their exploration projects have been kind of left
You're
behind,
thinking of
including
Oyo Tolgoi or something like that. So,
Sanoya Togo. It's one of their other explorations. It'll come to me.
okay.
But their budgets have been going that way. So there wasn't budget to continue it on. So when we got the opportunity to get it back, we kind of looked at it and said, okay, now's the chance to really kind of tie this together from an American Pacific standpoint and focus it on what we think it can be, put a resource on it, and really drive this asset forward. And so that's what we get the opportunity to do now.
Hmm. What about, is that why Rio Tinto got out? Like, was it budgets related? What did they tell you?
Yeah. So we got a call from their North American manager. And he said, look, I'm being moved down to Mongolia. We love the asset. I know the guys on the ground quite well. Know they really liked it too. And he said, look, there's a new guy coming in. He's the new North American manager, but things are changing. Budget is going to go over here. We don't have budget to drill it this year. It's probably a good time for us to step away if you guys want to take it on and drill it, or we can sit on it. And we said, look, we're happy to take it back because we've got capital and we'd like to drill it. And so that's what happened. It was a double-edged sword. I mean, we really let's just be honest, working with Rio, they're the second largest mining company in the world, I believe. That's a great thing for shareholders. But on top of that, I really liked the guys. I really liked working with them. We'd work with them again on other projects, or on Madison again at some point. We liked them. They were easy to work with. They did good work. And we got along well corporately. It worked well. But on the same hand, I mean, I remember telling Michael Gentile, and he went, "No, this is good news, man. Like you want to have 100% of that asset." And that was one of the first things he wrote when we put out the first drill results.
Hmm.
I think the top line on his note was, "So happy we have 100% of this because there's something here. There's an opportunity to make this something big. And when it can be something big, you want to own 100% of it."
Yeah. Yeah. Well, I think Rio would also see that it has the potential to become big. Supposedly they have the sharpest minds out there, or should be, after the sharpest talent out there. But then I started thinking, like, could it be something else? Like, could it be continuity? Because, and I mean, some of the historic drill results have seen some decent grade variability. So this is another question for Eric, I suppose, for our geological overview, but it's not. Did Rio tell you something about the geology where they're like, oh, continuity might be a challenge, or like we want to see less grade variability or something like that?
They never had issues in terms of what they felt was a continuity issue. I think one of the things with this asset that makes it a little bit unique. So when we talk about Fortitude, right?
Mm.
Fortitude had a lot of massive sulfide in it. The rock looks incredible, but it doesn't run at all. It's completely dead. Here at Madison, you've got jasperoid that runs and can run up to sort of half an ounce gold. I mean, jasperoid in Nevada is just kind of an indicator rock. If you see jasperoids, you want to start drilling down and try to get into the pay rock. You've got native copper that obviously runs, and then you've got massive sulfide that can run incredible grades. So outside of continuity, the one of the issues will be how do you process it all? So when they had production before, they were shipping some of the con just up the street. There's a mill called Phillipsburg. So some of the oxide was going there. Some of the massive sulfide, because it was such high grade, was going to South Korea. So they were kind of shipping into different spots. So I think when it comes to that point where you're going to put it in production, you're going to need some different circuits, that type of thing, or you're going to have to direct ship the ore as well. So that's going to be something to figure out as we get along. In terms of the continuity, skarns can be potty, right? You can get into really high grade portions of it. You can get into parts of it where it's dead rock. You get a bit of that here, but we haven't seen it to be an issue to the point where we're concerned about it at all. When you've got grades, I mean, we just drilled 38 meters of 2.34% copper equivalent, 75 meters of 0.98, and then great gold hits, 12 meters of 10 grams gold. I think there was 3 meters of 40 grams per ton gold. We've seen these incredible gold hits that can really carry the day, but you're also getting these longer runs of lower grade too. So we're going to learn more as we keep drilling it, whether it's going to end up being an open pit or an underground mine. That'll depend on size and variability as you go along.
Mm.
But it hasn't been viewed by us. I don't want to put words in Rio's mouth, but they never expressed that as an issue either.
Right. Okay. That's a very decent explanation. Again, it is something I will write down to talk to Eric about in our conversation.
It's a perfect question for Eric because he can hit on that pretty well. Eric's one
Yeah.
of those kind of rare guys that is incredibly good at geology, but also understands the nuance of production as well. So he can
Yeah.
answer that more intelligently than I can, I'm sure.
Well, I'm not a geologist, so he could be lying to me. I wouldn't know, but I'm sure he wouldn't. But you
I'm sure he won't. I'm sure there'll be enough people watching this that'll tell you if he is. So
that is fair. We do get quite a lot of
yeah.
that. But so essentially for you, what's really important for me here is you can and you want to fund all that work on your own. You don't expect to be looking for another JV partner. You just want to own 100% of this asset. You're dead set on that. That's how you're going forward.
It's quite funny when we first talked to Rio. Sorry, when Rio left, we kind of looked at each other and went, we think we should go this alone. We did have two conversations. We had one of the larger companies come down and spend a few days, spent 4 days on site, and we ended up declining the idea of working with them. We want to go this alone. We like Madison. We think it can be big, and we've got the money to fund it. So we're going to go after this aggressively on our own.
Right. Okay. Well, that's a clear message. That's what I was after. Thank you for that. And then
Mhm.
Palmer, you do already have a
Yeah.
TV partner there, so I want to talk about that project as well. But you recently diluted your ownership in it, if I read that correctly. How come? Yeah. Why that choice?
Palmer's an interesting project for us. It's a big project. It's 14 million ton VMS, good grade, good size. We think it can get an awful lot bigger. Our feeling on Palmer is that it's got that 50 million ton potential if it gets out and gets aggressively drilled. Our partner is doing excellent work. They're spending aggressively. They spent 26 million last year. They're spending 17 million this summer, just wrapping up now. There's 19 holes pending on that will release here in short order. Carries great grade. It was our first year to drill it last year, and we drilled the four best copper drill holes ever on the project. 40 meters of, I think it was 9% copper equivalent, 24 meters of 11% copper equivalent, on and on. But when they're spending that aggressively, it's hard for a junior to keep up. So it's, in our estimation, smart to sit back, take dilution at the project level rather than diluting at the corporate level at this point, and continue to drive that asset forward. Dowa would like to push this asset towards production. That's what they're there for. They want to own the zinc concentrate, and they want zinc going through their smelter as soon as they possibly can. They're willing to spend aggressively to do that, and certainly a nice position for investors to be in because you're getting an awful lot of drill data, particularly in a bad market where guys are kind of reining in. You're seeing, I mean, American Pacific will see almost 20 million in exploration this year, most of it happening this past summer. That's unusual for a junior that's got a 30 some odd $1 million market cap.
Yeah. Is that where you're gonna want to keep it going forward, or is it drilling dependent? Like, is there a point where Doa can come to you and be like, we really like this asset. We want to have 100% of it. Here's a bunch of money, or here's a bunch of shares, or a combination thereof. Step away. Do you step away?
We are transactional by nature, right? American Pacific is transactional by nature. We're happy to go in and do smart business where we can buy assets, buy companies, or sell assets, or sell, LLCs. So we're always open to listening when somebody wants to own something that we have.
Hmm. Why I'm asking that is because come time for production, which I think they're aiming for, or like kind of the unofficial, half official timeline is 5 years from now. Um, you would then have to fund your part of the build out, right? So that decision whether to keep the 30% or not is going to have to come relatively soon.
Yeah, no, that's true enough. I mean, one of the interesting things is we're operator here, right? So we get a 7% management fee. So in the past 2 years, we've been paid a little over $3 million along the way. So if Doha wants to keep aggressively spending, we continue to get paid, and that $3 million covers off the corporate G&A quite nicely, right? So from that point, it's certainly an advantage. And yes, there will come a time here where it's going to get big enough that they're going to want to go and put this in production. And then we're going to have to make a decision as do we want to come along with some of that debt funding and drive along beside them, or do we want to if we go below 10%, we convert it to an NSR, and then we own an NSR on the project as it drives forward. So that's an option for us as well. The other option is whether it be DOA or somebody else wants to own that percentage, or a larger company wants to own our percentage in some of DOA's. But that's something that we'd be, open to discussing as well as we drive forward.
How much money are you set to receive for it this year and into next year?
Oh, damn. Now I got to do math.
But so how
17 million by 7% is about 1.2 million.
that's
If I,
correct. Yeah. Seven by
if I'm doing
seven,
that right.
1.2
Yeah. So about
annually. Yeah.
1.2 million.
Yeah. Okay. And that's
Yeah,
so that's for so 17 million for the fiscal of 2024 then is what they're
correct.
spending, and then you're getting 1.2 million for it. You're running as I said 260. So for the first half of this year was about 260 is what you ran on G&A. Is that where you foresee it to kind of average out, which is going to put you somewhere around 30 million bucks for the year in G&A? Is that what you expect to do?
It sounds a little heavy, but it sounds about right. I think we're usually around 2.5 rather than
Okay.
3, but as you grow, you end up picking up more people, right? So that becomes one of those things. And we're getting more aggressive over at Madison as well. So yeah, that spend is probably about right. So yes, 1.2 helps to offset some of those costs for sure.
Right. Okay. Yeah, for sure. Um, what about the Nevada projects? Are you planning
Yeah.
anything there to do, or can you use them as financing options?
Yep, we certainly can. If we had, $50 million in the till, I'd be drilling all three of them.
Hmm.
We like Tuscarora, we like Ziggurat, we like Gooseberry. They're good assets for us. But quite frankly, Madison's really risen to the top. That's where we want to focus our funds. I think you'll see over the next little while, we'll look to joint venture those assets out and let somebody else spend money on them and retain percentages as we go forward.
Okay. Good. But there's no, I mean, you're not planning an outright sale or anything that's going to put some money in Kitty.
Listen, again, we are, to what makes us probably a little bit different is we're transactional by nature. That's really been a big focus for the company. We like M&A. If somebody came up and said, "Hey, I want to buy Tuscarora and the price was right," would we be willing to sell it? Yes, we'd probably want to maintain an NSR on it or a bonus at commercial production or something along those lines, so you retain some form of upside. But we'd certainly be willing to transact. We are transactional by nature and will continue to be.
Okay. That
Yeah,
was,
so whether it's JV or outright sale, I mean, it just depends on the group and it depends upon the deals that end up getting offered, right? I mean, we'll kind of see how that shakes over the next coming months.
are all four of those assets now available to do that with? And why I'm asking it is because I believe I saw something online that there was a you know, non-agreement. There was a lawsuit, I believe, filed against something. What's exactly happening there?
Yeah, so I won't say too much about it without getting myself in trouble. But yeah, we purchased a Ziggurat along with a couple of other assets from a private company, paid them some shares. They felt that they were entitled to some bonus shares, which we don't think they're entitled to. We think it's a frivolous lawsuit, so we've countered it. And so yeah, I mean the assets are unencumbered. If we were to lose, we'd owe them 4.5 million shares. So that's the downside. But we certainly don't think that they're due. Um, and so we wouldn't be right to just pay them. We were happy to get in and have a bit of a fight over it.
Okay. Is that an expensive fight?
No,
Hmm. Okay.
no.
Fair. Yeah, I don't
Yeah.
want to push you too much on that because I assume there's not much you can say about it.
Oh, there's a lot I'd love to say about it, but we'll save that for when the lawsuit's over.
It seems like it. Yeah, we'll have a chat about that. Oh, I didn't ask you this, but it's kind of jumping back and forth. But
Hmm.
um, on Palmer, when are we going to see some news out of that $17 million spend?
Yeah, so there's 19 holes that are pending. I'm expecting the first six in relatively short order. And as soon as we get those, it'll take a couple of weeks to just go through, final phases of it, and we'll have press release out on the
Yeah.
first six coming up here. But yeah, so from here through Christmas, you're gonna have news from 19 drill holes. So probably three press releases, I would think, from Palmer that we'll put out. We'll have additional news out of Madison, both on the sampling, our plans going forward, the radiometric survey as well.
Hmm.
And then potential on the Nevada stuff that there might get something, things may get done on that if those come to fruition, all between here and Christmas. So an awful lot of news, a lot of the drill variety coming up as well.
That's probably why you're getting more active right now on the marketing front. I saw that you recently engaged the marketing firm. You're on
Yeah.
Research Talks now, so it seems like you're again ramping up marketing efforts. What are the plans for telling the story going forward, and how much money have you budgeted for that?
Yeah, I mean, we've got a big shareholder base. There's a few thousand shareholders at this point. I think it's 4,000 shareholders in American Pacific, if my number's correct. Um, so we do market relatively aggressively. We do a lot of our own marketing as well. We just recently launched a podcast called The Speculators. American Pacific presents The Speculators, which is just me interviewing people that I know, both from the business and outside of the business. We worked with Peter Grandich. Pete's been great. Word out. Excited to be working with you guys, working with another group as well. So we're certainly out there actively telling the story. I think we've held back a little bit on that in the past maybe 6 months, but we're starting to get more aggressive on that now.
Hmm. Yeah.
And
So
part
what do
of
you?
part of that is just the success that we're having over at Madison. And I think we're going to have some good success up here at Palmer with these drill holes as well, just visually. So we want to get out and be telling that story as we're getting into the new year as well. The hope here is that we're going to get a bit of a more of a risk on market. And we've certainly shown in the past when there's a risk on market that we're able to shine the spotlight on the company quite well. So we want to be prepared for that time as it comes.
Yeah. How much money are you budgeting to spend on marketing?
If I was to give you a number for 2025, I'd say maybe it's $250,000, something like that. That's probably right sized for where we are today.
Okay. Yeah.
Yeah.
Yeah, that's fine. No, I'm just trying to work it out in terms of percentages, so that makes sense. I'm just looking at your podcast that you've launched. It's called the Speculators Podcast for people listening. So if you just do American Pacific Speculators Podcast, whatever, you can see it. And you have Michael Gentile scheduled to release soon. So
Yeah, so we'll release the video with Mike Gentile next week. So presently I've interviewed Peter Grandich, went down and interviewed him in New Jersey. So he's known as the Wall Street Whiz Kid. And we did the interview on a patio in New Jersey with the Hudson River and Wall Street in the background. So you had the Wall Street Whiz Kid with Wall Street in the background, which was kind of fun.
hmm,
And then I went and interviewed David Williams, who's a friend and a professional poker player. Just won over $10 million playing poker out in Las Vegas because he lives out in Las Vegas. He was also runner-up on MasterChef at one point. So a really interesting guy. I've interviewed Mike Gentile, which we're going to release next week. I've interviewed Jonas Lang, who's the CEO of another company. A really interesting guy and a good friend. And then coming up, my plan is to interview a gentleman who's the former CEO of Mattel and former CEO of Sony Interactive as well.
good. Well,
Yeah,
that's
if I can just answer on that for 1 second, one of the reasons that I'm doing this, um, I wrote an op-ed in Global Mining Finance magazine a couple months ago, kind of talking about, as I was sort of saying off the hop that, there was this, it's the slice of the pie that is just junior mining investors is quite small, but the investing public is quite large. And so rather than just going back and doing the same things over and over again, it's being able to access people who maybe have never looked at junior mining or mining before. So interviewing people who are within that world, within that speculators world, but maybe have never looked at mining, I thought was an interesting thing to do. We're not on there sort of pitching the company very aggressively, but it has got the logo and the stock symbol on it. So people may go, "Oh, what's this all about? This is interesting."
hmm.
And so that was the whole game plan of using it a little bit like a Trojan horse to interview interesting people, tell interesting stories, but get the American Pacific name out there to a different investing public.
Is that costing you money, or is it mostly hours? And how do you balance again running the company while also doing this? Because again, this is not something traditional. This is not typically what companies would go out and do, right? So how
No.
much money is it costing you? How are you balancing that?
Yeah, it's a great question. It's one I've been kind of waiting for somebody to ask me. How I do it is we're traveling all the time for American Pacific to go to conferences or go to meetings, etc. So I balance my travel. For example, I was going to the one-to-one conference in New York, and that permitted me to fly through New Jersey. so I could stop off, shoot the video with Peter, and then straight into the conference. Same with going down to Las Vegas, going to visit one of the projects, was able to go through and see David and shoot there. So it allows me to interview some super interesting people and do it in a different way. And you're right, I don't think there's anybody else that's kind of doing anything like this, which is makes it unique, which is another thing that we like. It doesn't cost a great deal of money. You do have to hire a crew and you do have to have somebody edit it. So there's a little bit of cost there. But outside of that, I mean, we're not it doesn't cost a great deal of capital. We're not paying the people that we interview. They're just happen to be, investors and people that I know. So yeah, it's unique for sure. And the response so far has been really good. I kind of wondered what the response would be if I'm completely honest,
Yeah.
but yeah, I'm really happy with the response so far.
Yeah, well, same because it's again it could be seen as kind of controversial because I suppose again just not many companies are doing that. So thank
That
you for
was
that.
part of the hope, to be honest. Was I was sure there was going to be people that said, "Oh, what's he doing? Why is he doing this?" But it also gives you a chance to answer, so I like that too.
Yeah, yeah, exactly. What do you were you reminding me of you going to these conferences and you're at Beaver Creek and so on and so forth? What story are you telling when you go out there now in this part of the market on these trips? What do you find investors caring about the most?
I can give you kind of a twofold answer to that. In that we typically go to these conferences. We're not just kind of going and hoping the right investor is going to show up. We set up our own individual meetings in advance with the guys and girls that we know. So that's one of the things that we do. I think a lot of people get a booth and kind of hope that someone's going to show up that gives them what they need. But we're sort of laser targeting in advance before we go. The other thing that we do that's maybe a little bit different is we go into each conference, sometimes with like a different goal in mind, right? So I won't say what the goal was at Beaver Creek because it's something we're working on in the background, but we went in kind of knowing we wanted to see these people and have these conversations for this specific outcome. And so it all kind of came together quite quickly before we left. So you end up kind of war rooming in your hotel room, trying to set it all up and knock down the specific goal that you want while you're there. So those are some of the things that we do that I don't know that all companies could do. Again, with M&A being a strong piece, that makes us a little bit different. And so it depends what we're looking to accomplish at each conference. Does that answer the question or?
Well, mostly thinking about what people are interested in knowing though right
Yes,
now is
sorry.
and yeah.
I lost myself there halfway through. Madison's the big piece of the puzzle for us right now. That's really what people want to hear about. What the game plan is. Where do we go from here? How do we drive that asset forward? And so that's part of the communication that we're doing now. I think when we put out that last press release, the second batch of drill results, shot a 25-minute long video that kind of lays it all out with a presentation showing people here, this is where we've drilled, this is what's next, this is what it's going to cost, and here are the timeframes to get there. So laying that out and getting that story out to people is important for us right now. So certainly that's one of the things when we're traveling that we're communicating right now. That's probably the most important piece.
Good. What do you have coming up? You have now that we're in this topic, what else are you doing for the rest of this year in terms of conferences? You going to Europe or what else are you doing?
Yeah, I'm going to London in November for one to one actually. Going to their conference. I think that's the last conference of the year for us. I know there's a few over in Europe. Manuel Belli holds a conference that's
Yep.
excellent as well. Swiss Mining Institute. We did that last year and it was an exceptionally good conference. I have two young kids at home. I have a daughter who's 2 and a son who's 7. So I try to keep the trips tight so I can be here to see them grow up as well. So we have to select them and be careful as to not just how we're spending the money, but how we're spending our time too.
Yeah. That's a fair answer. And I appreciate it. I think I've been through most of it, Warwick. What am I forgetting to ask you though? What do you think is important for this specific overview that we should be talking about that I'm not bringing up?
Listen, I think you've done a pretty great job of getting through most of it. I mean, we're a $30 million market cap, but we'll see 20 million in exploration this summer. We focus on high grade assets in the Western US that can be the desire of majors. We've worked with some of the largest mining companies in the world, and we're fully cashed up. So, I mean, that's kind of the synopsis of what we're doing, and a tremendous amount of news flow from here to Christmas.
And hopefully, again, I'll be getting those updates in an interview format between now and Christmas, just not on Christmas. I kind of like Christmas. And thank you, though, once again, Warwick, for joining me in this episode of Energy Transition Talks. I'm letting you drop off now because it's time for me to travel not all too far away from you. I'm actually going to the Nevada of 40 years ago, also known as Idaho, but I'm not going to be skiing in the Sun Valley. And I won't even be buying potatoes here, but instead I'll be looking for the next tier one discovery in many different metals, including gold, copper, silver, molybdenum, lead, and zinc. Luckily for me, though, I'm not going on that trip alone, as I'll be joined by Dr. Curtis Johnson, the CEO of Scout Discoveries Corp. Now, this is where I typically go through the company's primary listing, give you the ticker symbol, the volume, the trading range, and everything else on top of that, as well as walk you through the company's most recent financials. But this is actually a private company, so it is not yet listed on a stock exchange, although that may be changing soon, and Curtis and I will talk about that later on. What led me to the story was actually the CEO of Ridgeline Minerals, Chad Peters, who is, of course, a client of Resource Talks, but more importantly, he's a friend of the channel. And he's also a director for Scout Discoveries with another famous name on their board, also being Dr. Neil Adshead, who's worked for Sprott for over 10 years, where you might know him from. And I believe he now also advises Willem Middelkoop's Commodity Discovery Fund. Another relationship to Scout is also their connection to EMX Royalty with Dave Cole, whom I recently interviewed as well. And more specifically, Scout Discoveries was actually spun out of EMX almost 2 years ago now, at the beginning of 2023. And EMX still owns over 12% of Scout. Other large shareholders that you might have heard of include Electrum, the Electrum Group, which is actually the largest shareholder, accounting for over 30% of the company. Over a quarter of the company is in the hands of institutions. Over a fifth is in the hands of high net worth individuals, including famous names on here would be Rick Rule, Paul Stevens, Larry Childress, David Elliott, and Andrew Williams. And then over 10% of the 26.5 million shares that are currently outstanding is in the hands of management and directors, all of which helped the company raise over $10 million when it got formed, or since it got formed in 2023, the beginning of 2023. As far as I understand it, Scout's main business strategy, if you will, is to balance the risk of discovery by maintaining a diverse portfolio of assets across various geological settings, but also various metals, again, including gold, copper, zinc, lead, molybdenum, and silver, and also across different assets that are diversified from a permitting agency standpoint, as well as a stage of exploration. So, for example, there's 3 assets in the resource stage. There's 4 that are drill ready. There's 3 that are close to being drill ready. And there's 4 more assets in a very early stage of, I suppose, the desktop and field work stage. The goal becomes even more specific when you know that Curtis wants to find tier 1 assets specifically. Now, in my books, those are large, long life, low cost mining assets with a risk adjusted NPV that's exceeding $1 billion. So hopefully I get to ask Curtis what he deems to be a tier 1 asset later on as well. But they're focusing solely on Idaho to achieve that. And again, there's 14 projects in total in the pipeline. There's also 2 internally owned drill rigs, and that could potentially speed up that discovery process, which is something we'll talk about as well. And one of their main bets for getting there is a project called Cuddy, kind of like Dr. House, only this Cuddy is Cuddy Mountain, and we're talking about other stuff here. But Cuddy Mountain is a large-scale copper porphyry target located adjacent to Hercules' discovery, and so it's in the southern extension of the Stinkina Quesnel porphyry belt. I don't even know how to pronounce that. I've seen it on paper too many times, never really pronounced it. But that basically stretches all the way from British Columbia into Idaho. So it's a big belt, big porphyry belt. The project sits within a 10 square kilometer outcropping porphyry copper system where historic shallow drilling in the 1960s returned intercepts as 177 meters grading 0.34% copper with higher grade intervals within that as well. Despite the historic work, though, the core porphyry target remains untested according to Scout, and their goal here is to validate and expand these earlier results in 2025. They're not doing that blindly, though, as some geochem as well as some geophysics have been completed on the project, with the rock geochem showing widespread high-grade copper moly and gold anomalies at surface, and then the soil geochem outlining porphyry-style copper moly and gold anomalies at surface as well, which makes them believe but there are actually three porphyry centers. The geophysics and specifically they did magnetics, conductivity, and an IP. They also confirmed their thesis earlier this year that there are three porphyry centers, while also pointing toward the size of those three potential porphyry centers being about a kilometer each. So they're rather big. Of course, that's all nice and well, but as the old saying goes, if you're going to lie to me with geophysics. Just kidding, I made that up. But it might well be a saying because you never know until you actually drill it. And that's exactly what Scout wants to do, right? They want to drill it. They want to put specifically 10,000 meters of drilling into a first pass sort of phase one drill program that's hopefully happening in 2025. And we'll talk about that as well. Cutting Mountain, by the way, is only one of the 4 drill ready targets, as I told you. But I'll save your ears from having listened to me go through all of the assets here, and I'll go and I'll direct you to the website at scoutdiscoveries.com to read more about those targets. But just briefly on the second flagship project here, it's called Erickson Ridge, and it's located in the Elk City district of Idaho. Erickson Ridge is a gold project with a historical resource of 237,000 ounces of gold, grading almost 2 grams per ton. And recent drilling by Scout also had 5 holes going back with mineralization, and they were highlighted by an intercept of 100 meters of 1.2 grams from surface, which makes them believe that the resource is open in all directions and with a 1.5 kilometer untested gold in soil anomaly extending along strike, and so comprising yet another one of the high priority targets. And then the last one of the flagships that I'll go through here is the South Oro Grande, which besides being fun to say, it's also adjacent to Erickson Ridge, but it sits within a regional shear zone, which has a rather large 2x4 kilometer gold in soil anomaly on it. That's not the only anomaly on the property, though, and Scout has identified some geophysical anomalies that are actually coincide with those, and that's along a 6 kilometer strike length, with historic work also suggesting potential similarities to the nearby Stibnite gold deposit, which hosts over 7 million ounces of gold. Scout currently has 50 drill pads permitted on this property. But their 2021 hole did not reach the target depth of 600 meters. It got cut about halfway there, and it came back with rather low grades, but it did show disseminated QSP alteration and veining, suggesting their work here isn't done. And we'll talk about that later on. What is done, however, is you having to listen to me, Curtis, because it's about time I shut up and start listening to you. And I typically open every first-time interview with the question, who are you and why should I even consider listening to you? But with Scout, there's really something else that I can't help but wonder, and that's that, well, first of all, you're a private company, as I mentioned, yet at the same time, you were at Beaver Creek, and I also saw you did an interview with Rob Sin, I believe. So why even bother to market at this place if you're at this point, if you're private, and do you plan on going public anytime soon?
Yeah, well, thanks for that overview, Antonio. That was a beautiful summary in a couple of minutes there, sort of our story. Yeah, I mean, to answer your question in a short way, we're a private company. We're U.S. based. We raised a fair bit of capital last year, and yeah, we're moving our way towards public. You have to be a bit careful on the security side how you talk about that situation, sort of wrapping timelines about it. But it's a near-term goal for us is to get there. Since the beginning, we've been targeting a primary U.S. listing, so either sort of NYSE American or NASDAQ, as sort of a push towards appealing to U.S. capital. That's sort of why we structured as a U.S. company to begin with. Sort of a long story there, but yeah. So we've started to get the story out. It's Scout has been coming together for about a decade now. We don't need to go through that sort of long history, but Idaho has been a quite prospective place for a long time. I did my undergraduate in geology here, so quite a while now at this point. But it's been a goal of mine to pull this together, and we formally did it about 2 years ago, as you indicated, spinning out from EMX. So yeah, it's now time to start telling the story. There are some people that know it, but our long term, really our goal is to take the long term view on a single jurisdiction. I think you have to have focus. We've done that now, formally for 6 years, but it's really been more than that. And now it's time to move to the next step, which is letting more people know the story and bringing the story public. So.
Well, in that case, I do get to ask you a CEO barbecue classic here, but once you go for, if you go public in the near future, and if I am able to buy some of your shares, why would I? Why would I trust you and your team with my money?
Yeah, it's a great question. I'd say, a bet on Scout, which is an investment in Scout, is a bet on the jurisdiction of Idaho. We think a lot about risk and exploration. That is the game that we're playing. It's really taking risk, early stage, whether you're generative work up to resource stage. And I think when you take that risk, you need to understand where you're operating in a lot of detail. And I'd say our team, the Scout team, which is, about a dozen of us individually, not counting the drilling side of the company, we've been operating exclusively in Idaho for the last 6 years. I'd say convincingly, we're the most experienced team on the early stage side. There's certainly been other groups here operating at resource level. You can other public names out there, but we have the experience operating here. We know how to get things done. We have the team to do it. We do everything in-house, from claim staking up through soil sampling, up through drilling. So it's a very different corporate structure around that, but the entire vision is focused on these tier one discoveries. So we're looking for something that matters with a focus on a specific jurisdiction. It's quite easy to get spread thin if you're spread across different areas. From a value creation standpoint, value is created in discovery. Either discovery or making metal at the end of the day. And we are focused squarely in the former of those camps in discovery. We try to stick to our lane. And we've done a lot of work getting to a portfolio of 14 projects we have now. That's, filtered down from at least 100 different areas we've worked on since 2017, 2018. So it really is a long-term bet on discovery. That is, again, the value creation here, and a focused bet on a single jurisdiction in the US.
You're a PhD geologist. Why do you sound like you know how to speak? Most of them only know how to talk about rocks. You sound like you actually know how to do some public speaking.
That's pretty funny. Yeah, no, you're exactly right. There's certainly an error out there about sort of the PhD side. Yeah, maybe it's a longer story of why I did a PhD to begin with, and we don't really need to go into that. But I think, in my role, the most important thing is taking quite technical concepts and making them digestible. And, it's really seeing the forest through the trees. And often the people who are looking are the ones that don't have the technical background. And so I spend a lot of my time thinking about, what is the story we're telling? Everything's a story. And, that's what drives interest. It has to be a good story. And it's, for a lot of people, geology is a different language, really. And so I spent, the first part of my career really focusing in on the technical side, because I think it's important to have that foundation to build on. And then really the second half, trying to figure out how to tell a story in a proper way for a non-technical audience. So, if I'm reasonable at it, I think it's because I've spent a lot of time thinking about it and, trying to get better over time. Giving a lot of talks, and you give some talks, they land, others they don't, and you sort of learn and move on to the next. So, I'm hopeful that we can keep getting better at telling the story, but it is such a critical piece in this business of just, how do you translate. It can be a very quality project with good targets. And if told poorly, it's not going to land. So it is really threading that needle of, quality technical work, that foundation, but also telling the story in a right way. So yeah, I spent a lot of time thinking about that, and I appreciate the the compliment on that, because there's certainly a lot of geos that get bogged down in the details on various aspects. So I try not to do that too much.
And I do appreciate you thinking about it that way because, and I want to get bogged down into the details a little bit later on in some of these projects, or at least try to appear myself smarter than I really am. But you graduated college when you were 16 by the looks of it, or something along those lines.
Yeah, I mean, I still went straight from high school into college, did my undergraduate in geology, and sort of stepped into a couple hitches on the grad school side. But yeah, I was. Yeah, focus is maybe a thread sort of through our story and beyond just Idaho. I sort of knew what I wanted to do like relatively early on. I got enamored with just the concept of discovery and just the basic principle that most geologists don't make a discovery in their entire career, but the ones that do usually make five. And that to me means it's a skill. And that I found that really enticing, that, the ones that do make discoveries, you can think of the David Lowell's of the world. They have a skill set that others don't attain. So I was fortunate to be exposed to that pretty early on, and I just sort of dove headfirst into it and was quite focused. Yeah, really around that aspect.
What's tough though when you're a young CEO is kind of building that initial position in the company that you're going to be running. And with you, insider ownership is listed at about 10%. How much of that is you, and how did you build that position? What is your average cost of capital?
Yeah, so I own about 7% of the company. It's
Nice.
about 1.8 million shares, something like that, of our 27 million, sort of fully diluted. So some of that, I would say 70% of that was at the time of the spinoff. So I spent 5 years building the portfolio as part of EMX. We spun that into a new vehicle. It was technically a vend-in. It wasn't a spinoff. Sort of a long story there. But as we crystallized that new company, there were five of us as part of the team, and then two directors. So Chad Peters was one of the founding directors. You incorporate the company, you have shares that you incorporate initially with. Those went to the founding seven people. So it was the five people that left EMX full time to join this. And then myself as the CEO, and then our couple directors. So about 70% of the shares came in there, sort of fractions, fractions of a penny type, as you structure a company. And then we did our first financing, sort of friends and family, at 50 cents US. I'm young, I have two kids, and certainly haven't had a success in the past yet, but I put in as much as I could in that round. We did two other 50-cent rounds. I put in total about 35,000 US, somewhere right around there, which mostly came from my prior retirement funds, which no longer exist. But it's I understand the optics of that. The fraction of a cent shares, and it's really important to me that whatever I could participate in, I could do so. We've since done another round at $1. I'm putting in another 15,000 US, so it's sort of on the record. Again, for some people, these aren't big dollars. For me, these are big dollars. It makes a difference, but it's important that there's alignment around that. And I think the early shares, again, only to the team of people who left to do this full time. I think it's quite justified. There was a lot of work put in over the last 5 years to build the portfolio up on the generative side and advance it up to the current stage. But yeah, so that's how I ended up with the current ownership. I don't invest in anything else. I actually don't have any other investments. I had a few before, but I sold those for the scout financing. So this is all that I do. I'm not involved in any other companies, not a director of anything. And this is 100% focus, and where all my funds, any extra that there might be, do go. So.
Hmm. Well, given that you are a part of the team who put the land package together, do you or any of your family members still own a royalty or parts of those projects kind of personally or something like that?
No, because we were all employees of EMX at the time. So EMX, the longer story is, we funded the generative work as part of EMX. So we built a business unit. I tried to start Scout in 2017. It didn't work. I couldn't raise any money because it was too early stage of an idea. It was basically, let's go to Idaho and find some prospective ground. Right. There was a lot of open ground. There was clearly mineral potential. Stibnite, which you mentioned, is a tier one gold system, certainly. And on the silver side, there's the Silver Valley, which is the second biggest silver district in the world. So we knew there was geologic potential. There was a lot of open ground, but I just couldn't raise any money. It was very early stage, and in hindsight, it's not a very investable concept for most people because the lead time is very long, right? It takes time to generate land positions, and most of them fail. So you come up and you generate ideas, and it took us 5 years to build a portfolio that was meaningful. And once it was at the stage, which in my view is at the drilling stage, that's where it gets more investable for people in this space, because that's the catalyst for any sort of share appreciation in our drill results. That's when we ended up spinning the company out. But yeah, as part of that, so the only royalties are owned by EMX. That was consideration for funding all the generative work. Quite a lot of money spent over 5 years. So EMX royalty has royalty interest on every one of our projects that we generated as part of them. But no, I don't have any personal royalties. Nobody I'm related to does either. So
Good. I like to hear it that way. That is part of what I call my smell test for the barbecue.
That's
Let's
a good one. Yeah.
let's talk about flavor too, though, and more specifically how you plan to make shareholders, and in this case yourself specifically, money, which is simply put done by answering, to put it in a cliche way, answering the unanswered questions, right? What are those for you? What unanswered questions are you looking to answer with the money that you have right now, potentially with the money that you raise in the future?
Yeah, I mean, it's really all around, it's all around drilling at the end of the day. These projects are drill stage. The advantage of Idaho and why we went there, my prior experience was in Nevada, was the targets are at surface, which is a different game you're playing than if you're drilling through cover sequences or you're drilling deep targets. It allows you at, for very cheaply, actually, basically geologic mapping, geochemistry, and maybe some geophysics. You can understand the scale of the system, which is the critical question in my view. If the scale is not big enough to fit something of tier one size, it's just probably not going to be there. And that's a basic fact that I think a lot of groups don't think about is what the footprint of the system we're looking at is. And as well, you actually can't think about it if you're drilling a kilometer hole to a buried target, right? So that's why we went to Idaho is we could understand relatively cheaply kind of what the scale of what we're looking for is. And so everything that we worked on, again, say rough numbers, 100 projects down to what we are at 14 by now, had that scale, but you just continue to do the work and it just usually the results show up negative. And the results, if you're being objective about it, that's just exploration. Like you do the work and it often doesn't come back what you think it is. And so then you either drop it or you figure out if there's still a target remaining.
Hmm.
So the key on unanswered questions in my mind are, and the purpose of Scout as its own separate company is to understand that third dimension. We have a really good handle on the two-dimensional, which is the outcropping portions of most of these projects, Cuddy Mountain, which you alluded to. There is clearly a footprint of a tier one porphyry there. Now the question is, does that actually exist at depth? It's in that third dimension, and that's purely drilling. And that's why we own two of our own rigs, because it is Scout Discoveries is a story of drilling. And if you just go back to first principles of what a discovery is, it's quality geoscience and it's quality drilling. It's those two things together, and you have to get them both right. And so now the unanswered question, say Cuddy Mountain or any of the other gold assets, is can we show the scale that we know exists at surface continues to depth? And if we can, then there's quite a lot of value that can be created there. Then we're looking at things that could be tier one. You don't know until you have a lot of holes into it, but you do know, and we do know that the scale does exist to host those systems now.
Hmm. What is your cost of drilling going to be with with these two rigs that you now own?
Yeah, so it's highly variable on drilling side. So for our budgeting, we use about 225 US a meter, sort of all in. It can be as low as 150, maybe a little better if things, if the rock conditions are good, the mobilization's good. And if it goes poorly, as it often does in fractured rocks, it can be 300 bucks a meter. And I think a useful metric for people to have in their minds, if you're based in Canada, that sounds very expensive still. The average, I would say, most in the US would agree the average sort of all-in drilling cost would be about 500 bucks a meter for core. Our rigs are core, so we don't
Hmm.
do anything on the reverse circulation side, sort of reasons for that. But it's roughly 500 to 600 bucks a meter is probably all in what you're going to get for the size of programs that we do, which are anywhere from 2,000 to 5,000 meters, maybe up to 10,000 at Cuddy Mountain. When you start getting very big programs, you can drive that cost down through contractors. But yeah, we're roughly half what we would pay otherwise, which is why it's worth it. So
Nice.
because it's the single biggest predictor. It's at the end of the day, it's a numbers game. Like, maybe we have a smarter technical team or what have you, but at the end of the day, you have to drill a lot of holes. And you got to be able to finance that somehow. And it's $500 a meter is just not tenable. Like you're not, your odds of getting enough holes financed are just so low at that point. It becomes very challenging. And, even on the reverse circulation side, drilling, in the US, you're still paying 250 to 300 bucks a meter, probably. You maybe get a little better in some instances, but it is the main lever you have to pull to get right on the drilling side. And there's other reasons beyond just the cost to have the drillers in house, but yeah, it is a distinct advantage. We have a big portfolio. You have to work through it somehow. We don't want to hold 14 projects in 3 years. It's expensive, and it's a waste of time if we're just sitting on projects and not doing anything. So we've got to drill them and drill them as cheaply as possible.
Hmm. That's all in 250? So assays and personnel and everything?
No, that's direct drilling. Yeah, so
Okay.
that would be, yeah, sorry. That's straight drilling costs. Assays, personnel, yeah, you'd probably wrap a comfortable number around $300 a meter, all in, kind of all that. That would be a good budget number we would use. Again, it's variable. It depends on a lot of factors, but
Right.
yeah, that's a number to use.
You
Yeah,
mentioned
and
cut. Yeah, go ahead.
oh, yeah, just on to crystallize with sort of the what it would cost otherwise, and all in costs, for including assays and geos for contracting would be more like 6 to 750 a meter, kind of that range. That's when you sort of roll that in. It's probably about 25% on top, maybe a little more, a little less.
Right. Okay. So again, it's not cheap, but it is cheaper than what you typically do if you had to find someone else to drill with. Lowers the risk too, I find, of slowing down and having to find the right contractor, working with new people every time, and all kind of the intricacies that you don't typically see when I'm doing desktop research and I see a contract for drilling. I don't typically get to understand what really went into getting that contract. With you, all that's taken care of. But I want to talk about
Mhm.
Cuddy. What exactly do you want to drill at Cuddy? Because again, there's three porphyry centers. So what's the split of the 10,000 meters that you hope to drill between those three? And how do you even pick a favorite one?
Yeah, that's a great question. So I would say there's high conviction. There's two porphyry centers there, and we think there's a third. So the two that we know for sure, one is called IXL, the other is called Climax, and the third is called Railroad, which we speculate is there. There's good evidence for it. IXL and Climax, they outcrop. In porphyries, you're looking at quartz veining largely. That would be sort of your best indicator of what's at surface. There's different alteration facies that go along with that. But we know at IXL and Climax that these outcrop. We've mapped it. It's been drilled at IXL historically. That's the historical that you mentioned. Is in potassic alteration, which is usually the core of these porphyry centers. Yeah, and so how do we break down the drilling? So originally, IXL was the main target. It was obvious, it's 6 out of the ground. There's good drilling there. Climax was sort of an idea, and we didn't really have railroad on our radar at the time. But you go out and you do the work across the land position, and you let the data drive thereafter. And when we got out, and the key data set was really the soils, because the outcrop is maybe 25%, 25% of the project area would be rock outcropping, the rest would be soil coverage. And so we knew initially that the soils would be the key data set to tell us the scale. We could, you can sample rocks here and there. It's always selective, right? Geos are really good at picking the best looking rocks and putting it in the bag. And the soils are quite objective. They're spaced. We did 100 meter by 100 meter spaced soils. So you have a spatial statistical component you can bring into it and say, like, actually, here is the footprint. And once we got the soil data back, would have been about June, it was pretty clear there were multiple porphyry centers there. We didn't quite know until then. And then as we pulled in the geophysics, particularly the IP and the magnetics, were quite useful at showing that Climax is actually the best target by a long shot out there. From a, sort of an porphyries and exploration in general, you're basically creating layers of data. And then you have these overlapping anomalies, whether it's magnetics or geochemistry. And just pretty clearly, when you layer all the data up, Climax stands at the top by far. I could sort of walk through those specific things, but geologically, it's the best prospective host sequence. Geochemically, it's the most anomalous and the best spatial cohesion of, in particular in porphyries, you want to look at molybdenum in soils. That's a very useful thing for understanding the scale and where you are in the system. And then the chargeability and the IP were sort of one-to-one circular anomalies, the things that you dream about as a geo that you might get from from a survey. It generated the spatial patterns we wanted to see there. And not to say IXL didn't, it just wasn't as good. And then Railroad is the third piece that, as the more that we dug into it, the more it was clear it was not related to IXL or Climax. It's too far away spatially to make sense. There's good copper mineralization at surface. It's largely skarns there, which are related. And so we think there's a concealed target there. That one will take a drill hole to really know if it is there or if it's not, but it's a pretty clear test. So that's just sort of the way we looked at how we rank it. Climax needs at least 5,000 meters of drilling. That's how we would allocate. We try not to be too firm on the committed meters because we could drill 5 holes and it doesn't look so good, right? And we don't want to continue just drilling 5,000 meters to get that done. But it feels like a pretty reasonable test. Say you could think 500-meter holes, probably 10 of them at a base level. If the rocks look good, we'd push them deeper, 750 or a kilometer to see. But that's not knowing what we don't know at this point until you get into it. That's Climax deserves the bulk of the drilling. IXL would be second. I think we sort of have 3,500 meters earmarked for that roughly. And then, that's starting in the area that's known. There's a nice volume of 0.2 to 0.5% copper that's outcropping there. It'd be good to define that in some more detail and understand if there's a high grade core. So 3,500 meters should give us a good sense of that, whether we want to continue drilling there or not. And then a few holes, say 2, 3, 500 to 750-meter holes at Railroad will tell us if we're at least seeing alteration indicative of a buried porphyry there, or our concept is just totally wrong, which could be the case. So,
Well, we're talking about going at depth. These are Jurassic age rocks, as far as I understand it. So not the oldest, but still relatively old rocks. They've had time to be moved around and stuff like that. Are you concerned about erosion or tectonic disruptions that could potentially have reduced the size of the deposit at depth or moved it or something like that?
yes. So the age, it's actually Triassic. We have a recent age on that. We thought it was Jurassic originally,
Okay.
but it's about 209 million years old, which puts it in the same age bracket as Copper Mountain and Highland Valley, which are the next sort of deposits up in BC, which is a good thing. You want it to be part of a fertile belt. But yes, it's old, and it's certainly more complicated than we know. There's just not enough outcrop to know for sure. We know there's faulting in there that's complicating it. We have some ideas around, from the geophysics and from our mapping, but it will take drilling. And usually how it goes in the first pass program, you have some ideas and they're either 50% wrong or 100% wrong. So, we'll learn via the drill bit. We're clearly in system. That there's no question about that at this point. IXL is deeper. It's eroded a bit deeper down, but Climax looks like it's in the right part of the system, which in our view would be kind of the transitional zone from potassic into sericitic. So it's sort of upper expressions of a porphyry. That's what's exposed at surface, which is exactly what you want. Yeah, well, I think we'll learn via the drill bit, quite rapidly, but it's the surface data are compelling enough to know that. Like, it would be very surprising if we just drilled 100 meters and it'd be totally out of alteration. Like that would be pretty shocking. But yeah, the structure is complicated. Our neighbors, next door at Hercules are showing that certainly that it's relatively complicated structurally. Although some of their alteration seems to hang together pretty well. So I can't give a high conviction answer on that, but my suspicion is that it's older, so it will be more complicated than not.
What's the outcropping alteration again?
So at IXL, it's potassic alteration at surface, really nice quartz veining. And then Climax is the transitional zone. So the transitional zone is usually documented it'll be remnant potassic alteration and it'll be overprinted by sericitic. And so we see that both in the veining and in the alteration at surface at Climax. So that's a pretty ideal place to be in a porphyry. It suggests that, if there is a productive center, it should be within 500 meters of the surface is the idea based on the geochemistry.
That's exactly what I was going to ask, is how deep do you think it's going to be? If it's potassic, then it's outcropping. That's kind of the third layer of alteration that you typically see on the porphyry alteration chart. Yeah. Okay. So but 500 meters deep, that's on IXL that you think the porphyry.
So that would be Climax and IXL. So IXL, there's good copper mineralization at surface. So the best historic hole was 177 meters at 0.34% copper. There's a nice 40-meter zone at 0.8. True depth, we're talking, about 100 meters true depth, something like that. And it's a prominent hillside, so it's actually a very favorable topography from a surface. If you're looking at something near surface, it's quite favorable there. So yeah, we want to test IXL down to 500 meters. That's the goal of this program. It ought to be in that upper couple hundred meters if it's there. If it's not, it gets a bit more challenging. So it will take some drilling to know that. Similar with Climax, it should be within the upper 500 meters there. If it's not, we need to go back to the drawing board and figure out why that's the case.
And again, that's on the belt that kind of extends from BC all the way up to you. Typically in BC, they find these things deeper than that, though, right? How come?
Depends. Often it's just a function of erosion. So after the thing was deposited. So Highland Valley is an example, which is one of Teck's operations there. That mostly outcrops. It's similar in that, like, they have a couple different porphyry centers there. It's actually very geologically analogous to what we see at Cuddy, where some of the deeper porphyries are pits. They were mined historically by Kaminko and others before Teck acquired it, and but there it is a function of just erosion. It eroded it the right amount. It eroded it down to where it was within the surface. And I think I'm sort of getting out of my lane talking BC porphyry. There's people that are much better at that than I am, but there's been a lot of exploration for porphyries in BC, especially in the southern part of the belt, where you sort of in some ways exhausted that upper 500 meters of exploration potential. Like most things that are in that range have been tested. This would be the southern port. I wouldn't lump the Golden Triangle into that. There's sort of differences there, why there's still things at surface, but the southern part of BC, it seems to me that a lot of that has been tested. Cuddy Mountain was one that kind of fell off the radar as well, and it just hasn't been tested at that level. So yeah, we don't think that there certainly could be something at depth, but it really is a near surface target that would be different from, say, yeah, some of the other porphyries that are being discovered in BC that are quite deep now. Yeah, we see good potential at surface.
Hmm. Well, talking about the age of the rocks, by the way, Curtis reminded me to ask about the ground conditions and how challenging they might be, though, and I'm asking that because at Oro Grande, again, you had to stop a hole kind of halfway through in 2021 because of challenging ground conditions, as far as I understand it. So is that only in a specific part of the state, or is Idaho overall challenging to drill?
Yeah, so actually on Oro Grande, so that wasn't us. That was a previous group. When I was at EMX, we'd optioned South Oro Grande out to a junior. A junior company came in and they drilled that half of a hole, so they lost it. We actually just drilled 11 holes out there, and it wasn't terrible. So that was one of our main focuses this season, was drilling South Oro Grande. So we got a lot of holes down there, and it wasn't the worst. Yeah, drilling conditions are usually a function of the geologic units that you're drilling through. It's often that, and then what sort of alterations you're looking at. If basically you can think of it as, if the rock is highly fractured and if it has a lot of clay, you're going to have problems. Likely, you're going to be slower production rates. It's going to be hard to keep the holes open and continue. So, South Oro Grande, we didn't see that. There were other issues with the previous group, why that hole didn't get down. They were fighting winter and a couple other things there, but yeah, we came in and drilled just sort of 400-meter holes in there. It wasn't a big deal. At Cuddy, I don't think it doesn't seem to me like the drilling conditions are going to be horrendous there. The rock is relatively competent at surface. Porphyries are usually reasonable drilling conditions. It's usually sometimes it can be tough, but the stuff, the rocks at Outcrop look to be reasonable drilling. That's our take on it. It ought to be in our portfolio. It should be one of the easier drilling projects, but time will tell.
Hmm. How does the ground that you have combined with the geochem and the geophysics and everything else that you've done so far, how does that compare to Hercules's discovery so far? And are there any lessons that you can learn from how they made their discovery, including the drilling conditions and everything else?
Yeah. Yeah, that's a great question. So the big difference between, I'd say, Hercules' ground and our ground is that there is an upper sequence of rocks that is Jurassic, and it only exists on Hercules' sort of side of the line. And that is where Hercules was called Hercules Silver to begin with. They were exploring this Jurassic age silver mineralization. That is, I think they use the term upper versus lower plate. So there's this upper plate unit that's about 300 meters thick on Hercules. That's hosts the silver. They ran a chargeability survey or IP survey with a chargeability anomaly, and they drilled a deep hole down through the Jurassic into the lower Triassic rocks. And that's when they discovered the porphyry. It's a pretty amazing story, to be honest. And um, on our side of the district, the Jurassic rocks are fully eroded off, so they don't exist there. And so we're beneath that upper plate sequence. Most of the drilling challenges have come from that upper Jurassic unit because the rock type is a rhyolite and it's all clay altered. So it's really tough drilling there. And it's hard, especially when you're drilling deep holes down through it. You just are always fighting those shallow rock conditions. The clay wants to grab onto the drill pipe, and you just have issues, especially when you have a long drill string going down through it. And so they've been really fighting that. It's been tough for sure. Fortunately, we don't have to deal with that at Cuddy Mountain because those rocks are fully eroded off. So it looks like it's eroded a bit deeper down into the system where we can actually collar in the more competent rocks in the
Hmm.
Triassic.
Okay. But in terms of potential, how should I look at that? Again, they didn't go for the porphyry, they found it. But so what does that relate to, or what does that translate to in terms of potential?
Yeah, so Hercules is looking at a relatively deep scenario right now. That is the one of the challenges there. Certainly the mineralization comes to surface in a few places there. The soils show that. There's good copper and moly in soils. And that's, as far as I understand, I think the latter half of the drill season is kind of focusing on that. The earlier drilling, fantastic intercepts. It's just a bit challenged with the depth to it because you have to drill through that cover sequence. If it was eroded off, it'd probably be a different story, I think. So the question there is, can they, sort of in my mind, is can they demonstrate potentially underground grades, or can they show that the mineralization comes shallower to the surface? And so I think that's what the main focus of the drill program is this year. The fortunate thing about Cuddy Mountain is it is a near surface target. So for rough numbers on an underground sort of copper porphyry scenario, you pretty much need 1% to 1.5% copper, sort of as an aggregate large resource grade. That's a good kind of rule of thumb number. Those would be block caves or super block caves around the world. They need to be big and continuous. And for open pit, you probably need maybe zero point 0.4 on the low end. 0.5 is probably a good like rule of thumb. If you can show a resource at zero point 0.5 at surface, fortunately this district, it's road accessible. There's a high voltage power line that goes right through the property area. So like some of the logistical challenges, there's a bit less of a hurdle there. So you could look at things in the zero point 0.4, 0.35 copper range. But yeah, you're looking at sort of a fraction of the grade, a much smaller grade when you're looking, or a much lower grade system if you're looking at a near surface mineable deposit. And many porphyries are kind of in that zero point 0.3 to zero point 0.7 range. That's sort of where globally, that would be part of the bell curve. Like the majority of porphyries that are fertile are kind of in that range. There are some, anomalous ones that are percent plus. Those are the good ones, for sure. And we're hopeful that Hercules can show those grades exist there. That would be fantastic. They certainly exist in BC and some of the other porphyries there. They have those grades demonstrated. So, but we're looking at robustly a near surface, at least at this point, a near surface target that is sort of in a different bracket of grades that we might need to find.
Hmm. There's also skarn mineralization, though, as far as I understand it, on Cuddy. Do you
Mhm.
completely understand what that's related to, and are you testing that potential as well?
Yes. So, yeah, skarns are interesting. For some people, skarn is a four-letter word, right? They can be challenging to mine. I actually did my PhD on a skarn, so sort of a long story, but and worked in an operation there. There are challenges around it, certainly, but the great thing about skarns when they're in a broader porphyry context is they can really drive the high-grade portions of it. So this, as an example, the Bingham Canyon mine, which is outside of Salt Lake City, it's one of Kennecott or Rio Tinto's operations. That's a combination of a porphyry skarn. The bulk of the mineralization is porphyry, which is hosted in a granite, but skarn is just porphyry mineralization hosted in a limestone. It's just different, it's sort of the same system, just represented differently in different host rocks. And so they've mined out the bulk of the porphyry, which there was quite high grade. There's a nice zone of 1% copper, zero point 0.7 with some gold. And now they're mining the high grade skarns underground. It's called the North Rim skarn that runs anywhere from 2 to 5% copper with gold. It's smaller tonnage. It's probably sub 100 million tons. I don't know the numbers off the top of my head, but it's smaller tonnage and higher grade. If you can marry those two together, it's a beautiful scenario because you have the higher grade portions, particularly if they're shallow or near surface. It can drive earlier paybacks, things like that. But it is a way to increase that aggregate resource grade. So we see skarns as a positive. We're not looking at them as sort of small tonnage targets. The way that they're structured, they're sort of stacked zones where we're actually looking at bulk tonnage potential with the skarns. So we see that as a big positive as part of why Climax is a good target. There's good skarns at Climax, and then Railroad. The skarns there are just too far away from the other two porphyry centers, so they need to be related to something else. So they're indicative of there ought to be a proper porphyry center somewhere nearby the railroad area. But yeah, we see that as a good potential. There's good multi% grades at surface in these skarns, and in the sulfide, it should be kind of in that realm. It
Hmm.
looks reasonable, so it will take drill holes to know that for sure. But
I was today years old when I learned that most people look at skarns wrongly. That's what I'm getting from you here.
I don't know about wrong, but they they can be really challenging to mine. They're very hard, so they have high indexes for just ball mills, sag mills, things like that. They're expensive to crush, and they can be really potty and discontinuous. On the flip side, some of the big ones around the world, Las Bambas or Antamina would be another one. These are big skarns in South America these are multi-billion ton resources, but you've got to have that bulk tonnage component to it. So.
Yeah. Yeah. Good. Well, thanks for that overview. That's an additional lesson right in there. What about environmental permitting, locus, water rights? Is everything already taken care of to be able to drill those 10,000 meters?
Yeah, so railroad, we own private land there, so that we can start drilling basically right away. And the rest of the projects, we're in permitting now. We should have permits. The guidance has been May, June of next year. So we just finished up field visits with the regulators over the last couple of weeks, and so it's moving down the track. We've permitted quite a lot of stuff in Idaho over the last 6 years, so we don't see any reason why it would be extended beyond that. It's certainly always a risk in the U.S., but. Now, the feedback from the regulator side has been positive. They've been good to work with. Hercules has had good success. We kind of have that as it's the same people that we're permitting with, right? And they've had reasonable timelines on permit issuance and things like that. So yeah, we see a good path there moving forward, especially on the drilling side. So.
Hmm. Right. And that covers because it's different regulatory bodies that you have to work in terms of permitting everything that you have, but that just covers Cuddy that we're talking about here, right?
Right. Yep. Yeah. So our other projects would be, different BLM offices, different forest offices, different state agencies, things like that. And so,
Hmm.
but that's something we think a lot about is where there are places in Idaho that you cannot build mines. And I think people should understand that there are other mandates for land use where you're not going to get social license. We spend an enormous amount of time thinking about that because if you can't build it at the end of the day, a discovery doesn't matter. So it's
Hmm.
a critical piece to how we evaluate, places where you might be able to advance projects.
Why not spread the drilling here though? In that case, I mean, this is not a small program for a phase one program, 10,000 meters. So why not 5,000 there, three at Ericsson and two at Oro Grande or whatever other com com composition?
Yeah, it's a good question. With our two rigs, we can probably push 15,000 meters a year, something like that. Yeah, stars up to line, maybe a little more, maybe a little less, something like that. Cuddy Mountain is, I think, exceptional in some ways in that there are not very many new porphyries that major producers care about that are in the U.S. There are just I don't know of other comparables in the US that are not owned by sort of Freeport or Rio Tinto or some of the other majors that are untested at this level. So the size of the prize in a porphyry copper in the US is about as big as it gets.
Hmm.
It would just a discovery on the gold side would pale in comparison to if we found, genuinely a significant porphyry copper. So it deserves much of the focus in our view. And it's such a large system or systems as we're sort of outlining that I mean, honestly, 10,000 meters is not really enough to give you because what you need is a go no go decision, right? That's the whole point of doing a drill program is trying to figure out doing enough work to say, okay, yes, this project has a shot or this project needs to be dropped. And so when we think about drilling these projects, we have these in our minds. Other projects we can talk about those triggers, but Cuddy Mountain, it's just because you're going to drill 500-meter holes. You're talking basically 20 holes, or it's not that many holes across a 12 square kilometer area. So it's about as little as you could drill to get to maybe a go no go decision there, whether there is a porphyry here or not. It's this fine balance of how much drilling is necessary, right? we could at climax, not knowing what we'll drill, we could drill 3,000 meters and they all dust, right? And then maybe, okay, then you don't need to drill the rest there and you could get by with less. But it feels right that 10,000 meters is a good metric to put up, communicate to our shareholders now that this is the amount that we'd like to see here, with the understanding that we may, ratchet that up or down depending on what we see. But it is the majority of our drilling next year, because the size of what the meaningfulness of what we could find is so much greater than otherwise.
Hmm.
And porphyry coppers are they're unique, and especially one at surface that's relatively untested in the US. There's just not a lot of examples like that out there. So we see a lot of appeal. If we could show that there's something meaningful there, that's a much more valuable company than today, for sure.
Hmm. And then when it comes time to move the other targets forward, is your priority kind of Ericsson and then or Grande? Do you want to move them forward kind of separately or all together? Because they are adjacent and potentially they could be part of the same resource, right?
Yeah, so that's all part of the same district. So Ericsson would be on the north, South Oregon would be to the south. They're actually not connected in space, but it's all part of a broader mineralized shear zone. It's orogenic gold in that district, and yeah, so we actually like to move them forward in tandem. We This year we drilled about 2,400 meters out at South Oregon, testing the big soil anomaly. Haven't put out the news on that. We're still waiting on assays from that, but it's yeah, we like to move them forward together because your mobilization costs are much less if you do it together instead of having mobilized there twice, rigs and people and all that. So it saves a lot of cost and it just makes sense that way. So yeah, we would ideally like to put down, say another 5,000 meters out there next year. But it just depends so much on what we see at Cuddy Mountain. We would sort of split that across the two. Just the rocks that we've seen at South Oregon are good enough to justify a next drill program, almost certainly out there. And then Ericsson, we drilled last season. We drilled really nice holes out there. So, 101 meters at 1.2 grams from surface. Pretty unique sort of grades. That needs to be stepped off and tested. So it doesn't look like we'll have a chance to do that this year. So we'll try to do that next year as well. But it would be ideal to be able to do South Oregon and Ericsson together. It's an optimal way to do it.
Yeah. I do understand your desire to do the porphyry targets first, though, because and maybe this is where we go a little bit deeper, no pun intended, but we will go deeper on Ericsson Ridge, because as far as I understand it, this is a shear hosted orogenic gold system. Again, it's already got a small resource on it of close to 250,000 ounces of almost 2 grams. But how confident are you that you can grow this resource meaningfully while not compromising on the continuity and grade of the already existing resource?
It's a great question. That is the key question, is actually, can we grow the resource? So the reason we think it exists, there's effectively zero outcrop there at Ericsson. There's one zone that outcrops, which is the historical resource. It was drilled by RC methods in the 80s. There was no core, as far as we know, drilled, or at least that we know of the results. And so we came in and drilled some confirmatory holes. These would be the first angle core holes, which really tell you a lot about grade distribution. Sort of not to get in the history of RC drilling in the 80s, but there's a lot of examples of issues with RC drilling in the 80s, particularly below the water table, which this was. So we were concerned about grade continuity, and we convincingly showed with the first program that the resource as it sits, the portion that we drilled through, has nice continuous grades, multi-gram. The best intervals were a meter at 49 grams there. So we saw, very good continuous multi-gram with some nice high-grade zones within it, which is what we hoped for. Often you do the work and it doesn't come back what you hoped. So this was one that kind of it passed that test. Because if you go drill it and the grades are less, or it's discontinuous and scrappy, there's not really a sense of doing much more work out there. There's a zone in the resource, 250,000 ounces. It needs to be an order of magnitude bigger. This needs to be 2 million plus to have a shot. That's the way that we're looking at it. Unless it's exceptionally great, exceptional grades. But from everything we know, it's got to be roughly that size or bigger. And so being that there's no outcrop, we've done soil sampling out there and shown that the resource area is about, maybe a quarter to 1/5 of what the actual soil anomaly is. It's anomalous in soils where it outcrops, and then it continues along strike for another kilometer and a half. So there is this footprint that I keep going back to, but it's really important. If we had done those soils and there was no footprint of a kilometer and a half of anomalous golden soils, then it's probably not worth doing much more there because we're looking at a near surface gold system that needs to be a couple million ounces that you need at least a search space of a kilometer or more to find that. And so now it's we've done the confirmatory place, drilling in the resource that's known, and now it's stepping off along strike. And if we're unsuccessful there, you never definitively know if it's not there, but if we drill, another couple thousand meters along strike and we just don't hit significant mineralization, it becomes really difficult to fit a couple million ounces there, and that gets a lot less interesting for us. So that's the next phase of drilling as we advance it, hopefully next year.
That's exactly why I asked that question, because to my understanding, it's a rather complex land package from a structural standpoint. So how does faulting and the other structural features determine how you proceed with it so that you can ensure that you're not drilling into those potentially non-mineralized zones?
Yeah, there's not really a way to be 100% certain, to be honest, because there's not much outcrop aside from the soils. You just need to drill, intelligent holes. We know roughly the main mineralized structure. It's actually the rocks are older there, but they're than say Cuddy Mountain, but the mineralized structure is relatively continuous, which suggests that it's not chopped up by faulting or folding or other complicated things. So if we step along that mineralized structure as we know and we swing and miss, I think we would have pretty good confidence that we're looking at, say 250,000 to a 500,000 ounce size gold deposit. Maybe it plunges vertically, and we would probably drill a couple of holes to test that concept to see if it does continue, just within the small footprint that exists. But it gets challenging because then you're talking deep scenarios versus near surface. So yeah, it's the challenge in exploration, really. Like, when do you hold them? When do you fold them? Right? You're never 100% certain. But I do think the best predictor is if you can convincingly show that through drilling that the footprint is either there or not. And if we step off along strike and we drill it and the alteration's not there, there's just not much for gold in it. It becomes challenging to make an argument to continue drilling there.
Hmm. And it's kind of becoming clear from this conversation, if it wasn't obvious before, but you've got plenty of ideas, plenty of projects, plenty of targets to test those ideas on. But unfortunately, by the looks of it, I wouldn't say money grows on your back. It doesn't grow in mine either, unfortunately. Otherwise, I'd finance you. But we Ollie really talked about what 3 of the 14 projects. What are you doing with the other 11? Are they for sale? Are they for option? Are they for, like, how do you look at them?
Yeah, I mean, so our business model is squarely built around partners. It's a function of there's a number of reasons for it, but mostly it's that we want to stay in the discovery lane. Like, we don't have any interest in moving down the development pipeline. And I think, especially in the US, I mean, I live in Idaho. Our team lives in Idaho. If there was a Scout Discoveries upstream from where I live trying to build a mine for the first time ever, I would not support that. That's just my feeling on it. I think that, and it doesn't mean that that can't be done. It just means that there are going to be other people that are going to oppose somebody who doesn't have a track record building an operation here. The permitting timelines are long in the US. You realistically are looking at 5 years of permitting, best case. Like, once you submit your permits to build it, that's not really a timeline that we could finance and survive, in my view. And it's just not our team's skill set. That is better served for the majors. Barrick, Newmont, Rio Tinto, these groups can absorb those timelines because they have much bigger pipelines to do it. And they're happy to take those risks on that. And so we've built the business around where we do the early stage work. It's sort of called Scout Discoveries because we want to do that scout phase of drilling. It's the value creation of showing that third dimension exists, because I spent 5 years, EMX's business model is partnerships, right? And we tried to bring in good partners for 5 years on this portfolio. And the response we always got from the majors was go drill it and then let us know if you find something. And then if you do, we want to, you will have shown that third dimension exists. And so that's the entire point of the company, is to do that drilling, show that, whether it's a home run discovery or not, it doesn't necessarily need to be always. It just needs to be showing the scale of system and that there is that potential to find something large. And that's what you need to bring in the serious partners. So we view the entire portfolio as basically open for partnerships with good partners that have the ability to build something. I'd say Cuddy Mountain is the one where we're not taking a partner right now. We've had the ability to do so for a while if we wanted to bring on a partner, but we do want to do that first phase of drilling out there because there's a lot of value that can be created for relatively minimal cost, particularly since we own the rigs. But the rest of the portfolio, we would contemplate a joint venture or some sort of transaction with a group that we would have trust that they could do it properly because social license is everything. Idaho is a small state. Reputation matters, and we've spent a lot of time and a lot of hard work building up a good reputation here, and we just wouldn't want to risk that with partners we don't necessarily trust. So, but that is a core tenet of our model is bringing on through joint venture on an earn-in type structure as we advance this, a partner that can build it, that can then take it from us to build it.
Idaho is about 7 times the size of the country I'm in right now, which is Belgium. So I don't deem it a small state, but no, I can definitely see that. I can definitely see why you're going for that business model. Does it cost you a lot to hold all that ground though, or how does that work?
Yeah, so all 14 projects, it's about 450,000 US a year to hold. So that would be our entire annual holding costs. We don't have any intention of paying that for the next 5 years. We will filter down the portfolio. We had 16 projects before now. We killed 2 this year already. We went and did some work, and it just didn't look so good, and so we dropped them. We'll do the same on whatever doesn't stand up. The odds are we'll go from 14 down to 10 or 8 by this time next year. In the US, all land costs are paid in September 1st. And so we have until September 1st, we're paid up to do that. And it's important that we're disciplined to do that because we're not a land bank. We're not just here to sit and hold on claims, hoping for a higher metal price or what have you. It's really to do the work. So this year we did about 4,000 soil samples, I think, across a number of early stage projects, including Cuddy Mountain. That is the definitive test for these outcropping systems for most of them. If you can't show a robust soil anomaly, the scale it's a hard to fit something meaningful within it. So we did a lot of work there, as well as quite a lot of surface mapping, sort of rock sampling on earlier stage projects like Moose Ridge or Lehman Butte or some of the other ones, Robert Gulch as an example. We drilled 1,300 meters at Robert Gulch as well. Results look good. We'll do a phase 2 program there, certainly. We had a couple key decision points that it passed there. But yeah, we focused on Cuddy Mountain and then drilling South Ore Grand, but we did a lot of work on the rest of the portfolio too, with the idea that we're looking for something that is very hard to find, and that's a tier 1 deposit. And if we're lucky, one of these 14 projects gets there. That's just the odds we're playing, and I think it's best to be realistic about that you just need to do the work. And if you do the work and you're objective, you have a reasonable chance of getting there over the long term, which is our view.
What are you running for other costs? I know that's not public information, so you don't have to tell me if you don't want to, but what does it cost you to run the company?
You're talking just sort of annual G&A, kind
G&A,
of
yeah.
that.
Yeah.
Yeah, we'd be as a private company, we're probably around 500,000 US, plus or minus a bit. We'll see how it lands this at the end of the year, but we try to be minimum 80% of funds, closer to 90% of funds going into the ground.
Hmm.
So that would be, some legal costs with financings, transfer agents, things like that. We don't have listing fees. We'll go through an audit this year, so that'll push that up a bit as well, sort of costs. But yeah, that's kind of the range that we want to be at. It's really trying to just maximize the amount of dollars that go into the ground, and for those dollars, the amount of work that gets done. That's why we have the teams in-house. All of our soil sampling is done by our people internally. So,
Hmm. So that 500 grand, that's that's everything else. That's not the non-public company, so it doesn't account for regulatory fees and stuff like that, I don't assume. And then once you or if you get listed, that's probably what's it about double, and then you're running about $1 million in G&A, about 500,000 in land holding costs. Does that sound right?
that's probably about right. Yeah, especially with the US listing. Yeah, a
Hmm.
million is probably a comfortable number there
Yeah.
around, annually. to keep the company operating. So, it's a key decision, right, around the go public scenario. Is
Yeah.
it necessary to double that cost right now? So, it's 500,000 less dollars we can spend on exploration. So to go public, you need to increase your odds of access to capital. We have reasonable access to capital as a private company, and markets are not exceptional for juniors right now. So, it's a complicated question to answer, but yeah, it's an important one.
Hmm. Yeah, well, it seems like you've been able to finance now. So you financed once at the creation of the company, and then you financed the second time. I believe it's almost the same financing they did. So it's six first time and then five the second time, or something along those lines. Do you think it's realistic to keep financing it privately, though, to do this upcoming program and then the next one?
It's a good question. I think about this a lot. Yes, 2025 is realistic to finance privately. Thereafter is somewhat of an open question. That it's uncertain. There's just not, unlike maybe other industries, particularly in the US, you can imagine the tech side, there's enormous amounts of private capital available. That just doesn't exist in the mining side. And I've spent 2 years really trying to unravel that question of, can you, because there's an argument that a lot of assets, shouldn't be public yet in a lot of public companies, right? That they're just too early stage, and when is the right time to take something public? That's it's an open question. I think
Hmm.
a lot of different opinions on, and if you can show that, say Cutty Mountain has a discovery to be had, you could drill some good holes out there. That's a much more valuable public story, go public story, whether it's an IPO or an RTO or however you structure it. It's much more valuable than a speculative target, right? Based on surface data. And so there's strong arguments to say, well, you should drill it privately. But then there's also arguments that you should drill it publicly because you have the torque then for a share price that can increase with positive results. So yeah, it's the best answer I can probably give is 2025. It's we can finance that privately. It looks to be there's line of sight on that with aggressive work, ideally with two rigs. And thereafter, that's a question that we'll work hard on addressing over the next 6 to 9 months, and that will inform the go public decision, pretty heavily. So.
Yeah. Good. Well, it sounds like we might have some more stuff to talk about next time we sit down. But this has been a very good overview. I appreciate. I think I've been through most of the questions I wanted to ask. What am I forgetting to ask you though here, Curtis? What should we be talking about that I'm failing to bring up?
Man, I think you covered the bases. I don't know. It's maybe for next time we can table the discussion for kind of how the company came together. We didn't talk too much about that, but there's certainly a story there, and the longer road to why it took 10 years to get to Scout, right? But
Mm.
yeah, I think otherwise we covered the bases on the assets, and I think what I actually enjoyed that we focused on a fair bit was the philosophy around exploration and the strategy, which I think is critical. It's just absolutely critical that you have a strong, strategy as advancing your portfolio. There's a plan there, and that it's very clear like what you're looking for. And we've tried to be concise on that, like really wrapping around what we're looking for, how we get there. You have to be fortunate in some ways, but at the end of the day, you have to do the work. And so I'm glad that we covered a bit of that on yeah, really the philosophical side, I guess, of exploration and sort of advancing a portfolio. But
Mm.
yeah,
Good. Well, thank you so much for sitting down with me. That is a good idea for next conversation, and I really appreciate your time.
yeah, thanks, Antonio. I appreciate it.